from the past week session? Any questions? Yes, any questions? No?
No, sir.
Right. Summary list of steps for money recovery action. So there are, I told you that majority of the cases what we filed is based on money recovery. So there are two processes, money recovery and summary procedure. If you are using the debt recovery provisions only, you can use the summary procedure. But since we are not following the debt recovery provisions, we are filing cases. Almost all the banks are filing cases under money recovery action. So there are certain steps that you have to take before you file an action. File legal action in courts. So when you are filing legal action, as I told you last session, you have to prepare the plaint. Your legal officers will prepare the plaint. Along with the plaint, all justificated documents has to be attached. And along with that, then you go and file the case in the courts. Then those plaint and the respective attachments will be served by way of a summon to the defendant. So since you are going first to the for the courts, you'll be considered as the plaintiff, and against whom the case is filed, we consider as defendant. So finally, then the file answer by the defendant, and there'll be 2-3 days that he can drag this to get more dates to file answer. And there is a pre-settlement time as well before the trial. That judge will request the parties to go and settle before coming to the courts. If they fail in that exercise only, matter will be fixed for trial. So trial can drag for 8-9 days even. So normally from one trial date to another trial date, it will take 3 months or more than that. Or in special cases, it could be less than that as well. So after the trial is concluded, then what happens, you have to put your evidence, and there'll be cross-examination from the defendant's lawyer, and they will put their evidence. Then your lawyer can cross-examine. Finally, after the trial is finished, judge will request both parties to submit written submissions. So based on the written submission, the judgment will be declared, and then you can get the decree, and then the execution of decree is the next step. Then you go for court auction, recover the debt and the cost. So this is the normal the steps of processes with regard to money recovery action. So this is what all the banks are doing, rather than they go for debt recovery provision. When you come to in line with section 40 of the Civil Procedure Code, bank files the plaint with all the documents against the defendant, serve the summons on defendant file the answer to the
Sir,
plaint. Yes.
hello.
Yeah.
Sir, I'm sorry to interrupt you over here.
Yes.
Could you we may have done this last week, but as a small refresher, can you kindly tell me what's the difference between a debt recovery and money recovery? So what's the difference?
Yeah, I have not come up to the debt recovery area, right?
All
So
right.
I will come into that. Next few
All right,
slides
sir.
is based on that. Debt recovery is simply for the banking sector. There was debt recovery laws were introduced in 1990. At that time, Mr. N.U. Javardhana was the governor, and in order to protect the bankers' interest, in order to ensure that the banker could recover outstanding within a short period, they introduced debt recovery provisions. One of the debt recovery provisions what we are using is parate auction. So in parate auction, without going to the courts, your board of directors can pass a resolution and call for the auction. So that's a speediest method rather than going for mortgage bond auction. It will take mortgage bond action. It will take more than 10 years. So this debt recovery provision is a shortcut method, or in order to convert your non-performing into cash, right? So I'm a non-performing. You have filed action against me. If you go in the normal money recovery process, it will take 5 to 6 years. So if you file under debt recovery, you can claim your money within 1 year, right? So in order to ensure the debt recovery provisions, you have to ensure that your documentation is perfect. Because of the documentation is not perfect, the banks have failed to follow the debt recovery provision. It is available only for the bank, even for the finance companies that is not available. Therefore, they go in the normal money recovery action. So I will explain you what are the steps that you have to follow under debt recovery provision. Okay.
All right, sir. Thank you very much.
Serve the summons. Summons shall be served on the defendant if it is a file action. When the plaint is filed, if the defendant admitted the claim, it is good for the bank and can move for settlement and undertake it as agreed in court settlement. So if the defendant is agreeable on our claim, then there is no matter actually. Right? Then you can enter settlement and proceed. If the debtor makes a counterclaim in his answer, the bank has to file a replication. So you're saying, okay, your claim is 1 million. So I'm going to say, no, what you say is wrong. I'm going to go for a counterclaim. Then what happens? Then you have to file a replication. Give justifications to say, no, my argument is wrong. When the debt is disputed, it will move for trial, which take time to finalize the matter. So when the debt is disputed, the parties must agree on an amount. So if the parties are not agreeable on amount, then it will take more time to finalize that matter, and it will go for it will take through a court process. Now this ex parte judgment decree is where now you file the action against me. I came first day, or the summons have been served to me, but I'm not presenting in the court. So if the summons are presented to me, handed over to me, and if I'm not presenting, you can on the very first day itself, you can request the judge to go for ex parte decree. So without me, you're conducting your bank officer is conducting the evidence, and it'll be ex parte type of a judgment. So I'm not there. So what happens here? Once again the decree is served, if I can inform the courts, look here, this was not properly served, or I was out of the country, or some other reasons, court will give me a chance to interfere in the case. So most of this credit card type of cases I have seen that there's an ex parte decree. Those are not inter parte. Inter parte means both parties are involved. Ex parte means only you're the bank. I'm not in my absence. You lead the evidence, and finally you will get the judgment in favor of you. Okay. Special laws to recover debt by banks. Now, these are the debt recovery provisions. So there were a set of special laws introduced in order to protect the bankers' rights against the default customers. Now, Act number 4 of 190, titled Recovery of Loans by Banks, Special Provision Act number 4 of 1990. So that is the title of that particular act. Purpose: an act to provide for a recovery of loans granted by banks for economic development of Sri Lanka. This is the purpose, for economic development. So the whole idea is where now if I'm borrowing, if I'm not going to pay, if you can use the debt recovery provision, and I'm compelled to pay within 1 year, because the steps are very shortcut steps are there, so it will be easy, and the courts also taking this very handling very quickly. As a result, within 1 year you will be able to recover the outstandings or come to a judgment, right? And when you get the money within 1 year, once again you can use that money for economic development, or you can use that for further lending. So that is why this act was introduced. Along with that act, there were certain provisions were introduced. Debt Recovery Special Provision Act number 2 of 1990 as amended by Act number 9 of 1990. Purpose: to provide a speedy procedure to recover a debt through courts. Now if you take Parate auction, is not a court procedure. But here it goes through the courts. Procedure called summary. I told you that is previous one is money recovery. This is summary procedure. The facility must be granted on an instrument written agreement. So you have to give me the facility through an agreement. Casual transactions will not applicable. It can be a loan, it can be overdraft, it can be a mortgage, but you have to have an instrument. Instrument, check, promissory note, etc. So it can be a mortgage, it can be a check, it can be a promissory note, but you have to have an instrument on that. Amount should be not less than 150,000. Following documents should be filed. Petition. Now, when you're filing money recovery, we say a plaint. Here it's a petition. The term what we use for summary procedure is a petition. This petition is justified through an affidavit to the effect that the sum claim is lawfully due to the bank from the defendant. So there has to be a senior officer of the bank must sign this affidavit confirming the contents in the petition are correct and the amount what they have claimed is correct. So therefore, you have to ensure whatever your position description, your summary claim, position, what do you call that? Position statement should be correct, right? And the officer who need to ensure that the contents of this petition is true. But in case of a plaint, you don't have to do that. You don't have to give any affidavit. But here, along with the petition, you have to give an affidavit. So that is one reason where the bankers are a little bit reluctant to confirm what is there in the petition is right. Right? Because when you start preparing a plaint, you realize there are a lot of practical problems. Most of the time, the loan agreement is not there. There is no proof. There is no request. Statements are not there. Mandate is missing. So now in such an environment, giving an affidavit means you're committing yourself. And if you declare wrong information in the affidavit, based on the affidavit, the court can take action against you as well. Affidavit shall be made by a principal officer of the bank, having personal knowledge of the facts of the cause of action. Copy of the decree nisi, that is the instrument that we file. There's a document called decree nisi. Stamps for the decree nisi and for the service of it. Loan agreement, statement of account. This is a statement of account has to be correct. Loan agreement and other connected documents has to be filed. So simply you have to file petition, affidavit, copy of the decree nisi, stamp decree nisi, loan agreement, statement of account, and the other documents. So all these documents has to be perfect. You can't have any mistakes, right? If you have any mistakes and if you're breaching the law, and at top of that you have given an affidavit. So if whatever the stated information in the affidavit is wrong, the court can take action against you as well. So that is this reluctancy of the bankers to take action under debt recovery. Any questions up to now? Any questions? So I'm explaining the debt recovery provision and what are the documents that we had to file under summary provision. Any questions?
No, sir, it's clear.
Right. Then section 4 says document produced should be properly stamped, should not be suspicious, should be within the prescription period. Now prescription period is where sorry. 1 minute, I have included. Right. Prescription period is where now if you have an agreement, if you have a mortgage bond, sometimes you can take action. You have a timeline of 6 years to take action. If you have a check, it will be 3 years. If you have casual type of a transaction, it will be 3 years. So normally the instrument should not be prescribed. So the last date of default, you have depending on the instrument, you will be having certain prescriptive period. So you need to ensure that you file within the prescriptive period. Otherwise, your claim will be thrown out. So procedure, file a petition affidavit and all the documents. If all the documents are perfect, this is the challenge. The decree nisi will be served first instance. So do you file the copy of the decree nisi? It will be served to the defendant. Serve the decree nisi on the defendant with the petition, affidavit, and other documents. So if you have filed summary procedure, decree nisi will be served along with the connected documents to me. Defendant to seek leave from court to show cause against the decree nisi. So then I have to go to courts and request permission for me to interfere into the case, and also leave to appear and show cause against the decree nisi by the defendant. So in order for me to enter into the case by paying into court the sum mentioned in the decree nisi or ordered by the court. So for me to enter into the case, court will say, look here, you have to pay 1/3 of the claim or a certain sum decided by the courts. So in a normal money recovery action, there is no payment. Until you go for the judgment, it will take a lot of time. There is no requirement for me to pay. But in this particular instance, as soon as the decree nisi is served to me, for me to interfere into the case, I have to pay the amount what the court has stated. So it's very clear from the inception itself, you are getting money. It's true that it's kept in the court, then the process is going to be very short. Upon the court being satisfied on the contents of the affidavit filed, that they disclose a defense which prima facie is sustainable, framing and recording of issues. So then the trial stage start, sustainable framing and recording issues. So normally the first issues will be framed and then the trial and the rest of the process. So not like money recovery, the hearing period or the next hearing date will be a short set of dates, because the court want to finish as soon as possible. Where the defendant either fails to appear and show cause on having appeared, his application to show cause is refused, the court shall make the decree nisi absolute. So if I fail to come as agreed after allowing me to come, if I fail, decree nisi will be make absolute. Decree nisi absolute is not appealable. So no party can go to further higher court and appeal that decree nisi. But in a district court judgment, you can go to the appeal court and appeal. You can go to the higher court. But here decree absolute is not appealable as well, but may be set aside on the grounds that the defendant was prevented by reason of accident or misfortune, or that such decree nisi was not served on him. So if the party can prove decree nisi was not served because he was met with an accident, some other reasons, only such an instance only you can keep this decree nisi, set aside decree nisi. If not, it is not appealable at a higher court even. Then the execution of decree nisi absolute. Where the decree nisi is made absolute, it shall be deemed to be a writ of execution duly issued to the fiscal. So once the decree nisi become absolute, it amounts into a writ of execution duly issued to the fiscal. The writ of execution shall valid for a period of 3 years from the date on which the decree nisi was made absolute. So the decree nisi is the last stage. So still you have another 3 years. If you want, you can stay, but within a short period, you can exercise on this decree nisi. Restriction of alienation of property. After the service of the decree nisi, the defendant on his representative in interest shall not alienate any movable or immovable property. So once the decree nisi is served on me, I can't sell or I can't alienate any of my movable or immovable. Right? So unfortunately, we are not exercising on this process. So first, decree nisi is served. In order for me to enter into the contract, I had to pay a certain deposit, a certain amount as stated by the court. After that, the trial will go. Even the trial will have short periods, and then the writ of execution is executed. Decree nisi, when it make absolute, you can't appeal to any higher court. So simply within a year, say 1.5 years, you can finalize the case and you can claim money from me. But unfortunately, we are not using this method. The simple reason, we don't have perfect set of documents. So that is the only reason that we can't go through this shortcut method. Whereas this shortcut method is available for bankers, but they are not using it. Any questions on that? Yes.
So there were a lot of technical names mentioned, like decree nisi
Yeah.
and things like that. Do we
Yeah.
need to know in detail, or
No. Those are done by the lawyers actually. So as a banker, what is your responsibility is to make sure that you have a perfect set of documents. Your documentation is perfect. That is what they want. If you have the perfect set of documents, the lawyers will decide whether you're going to file under debt recovery provisions or money recovery provisions. So if they feel the documentation is incomplete, they can't go for debt recovery. They will have to go for money recovery. So then the lawyers will prepare plaint, affidavit, and the decree nisi. Those are served to the through court. Those will be served to the defendant, and for him to enter into the court, he will have to get permission, appeal, and when you are entering into the case, you have to pay what the court has stated. So subsequently, there will be the trial will be fixed after preparing the issues. Trial will be taken place, and the judgment will come. So initially, if you, as agreed, if you fail to come to the courts, then the decree nisi will become decree absolute, and then the writ of execution will be there. So normal case also, the writ of execution is the final stage. So within a short period, within just one year, you can get this writ of execution. So those are handled by the lawyers, not by the bank officers. But you need to ensure that you have a perfect set of documents. And even the decree nisi, once it becomes absolute, you can't appeal in any higher court, right?
all
Any
right,
other
sir.
any other questions for the others? Yes. Today there is a good number, right? Any questions? Can we move? Right. Execution of right. Sorry. Now this parata execution, I think you all know what is parata execution. It's a, once again, without referring to the code, it's also a rule applicable for bankers only from the debt recovery provisions. Without going to courts, your board of directors can pass a resolution and it will be open for auction. So here the concern is where today you know that it's very difficult for a bank to go for auction. Sometimes the customers, they come out with these enjoining orders explaining their position to the courts, and sometimes they block this your auction. So as a result, sometimes you go for auction and you through certificate of sale, you acquire the property. So the problem is where finding a buyer is a question, right? Today's market, it's very difficult to find a buyer. And top of that, uh, when there is an enjoining order, it will be difficult for you to proceed, because until the enjoining order inquiry is over, you will not be able to take anything, right? So market demand is less for properties, and practical difficulties of getting enjoining order by the client customer. Sometimes the speedy method is not there, right? But this is one of another method that was introduced from the debt recovery provisions for bankers to get the money as soon as possible for the economic development of the country. So economic development means rather than waiting for years and years on a particular matter, you can convert easily to your loans into outstanding loans into cash, where you can relend those money once again with the new customers, right? So that's the whole idea of this debt recovery provision. As I told you, due to the lack of documentation, because it's very clearly say it should be a perfect set of documents, so you can understand your level of perfection, and as a result you are not in a position to go for debt recovery provision or debt recovery action. Any questions before I move to parate auction? Right. Parate
Sir,
execution.
hello.
Yes.
So
Yes.
now after going for this debt recovery, now let's say we due to some documentation errors we lost the case. Can't you go back to what do you call summary procedure or
No.
this
No. Any cause of action you can only try once. You
all
can't
right,
once
sir.
again. You can't go for says no second option either. That is why initially you have to select whether debt recovery or money recovery. Right. So once you select the method and if you fail, you can't use another method to go for a claim.
All right, sir. Thank you.
Yeah. What about the others? You all don't have any questions? Right. So the parat execution is a procedure especially available for the banks. So and understand that these are available only for the banks, right? Not for the finance companies. So unfortunately, we are not taking the maximum out of that because of lack of knowledge. I don't know whether it's a knowledge or a negligence, right? So unfortunately, people are not so concerned about the steps what they have to follow. So it can be the lack of knowledge or that they don't know what are the steps that they have to follow. Instead of following the right steps, what they do, they go for the shortcut methods. Now, one important point. Now, most of the time, now since as I told you, uh, majority of the bankers are now going behind numbers and they want to ensure that their performance based rewards are secured. Now if you can do an analysis and see, just see first three quarters you don't have any problem, you will concentrate on good facilities, but in the latter part, the last quarter, you can see a rush for approving of these facilities. So the point is where now if you can do an analysis and see out of your NPL cases, how many NPLs are there which you have given the facilities from first month to the ninth month, and how many NPAs are there from ninth month to 12th month. So then you can see with a curve to show no, there is a high trend of NPS which we have granted during the last quarter, because last quarter means you have to somehow achieve your targets, right? So when you are running behind these numbers or achieving the targets, what normally happens, right? Sometimes you lose the quality and you give facilities for any person. So then what happens, when you lose the quality, when you reduce the quality, you will get bad customers, not good customers. Now those days when a bank is opening an account, so opening a branch, very first day you don't ask much questions, you allow them to open current accounts. I think the banks now they have stopped that process, even on the, because if you are opening a current account, you have to ensure that you open to the right person, because it's not good for your bank checks as well, because then the market might say, okay, the ex-bank checks are getting returned. So that is not a good impression that you are giving to the outside world, right? So you need to ensure that the restrictions should be there from the day one itself. But otherwise, what will happen? Um you will not be able to go for your achievement in the organization. So therefore, you should not just compromise your quality because you have a target in front of you. And top of that, now when a branch manager is getting transferred, following 2 to 3 months, you can see a lot of LDs are coming because the previous branch manager has balanced that those customers, but the new branch manager is not tolerating. So then what happens? There'll be more and more letter of demands or transferring into past due or legal action. So if you are working in line with a particular process, if you have a practice standards, I don't think that these type of things should happen from your organization, right? It has to be, you need to ensure consistency. Maybe that you can go for targets, that's not an issue at all, but you should not compromise your quality. Now, simply why banks are not going for debt recovery action? Because incomplete documents, right? From top to bottom, you can see a lot of gaps because sometimes now simply sometimes the banks they are taking initials. Right now, when a customer comes, you give the set of documents and you put a pencil mark to say these places you have to initial and full signature, and you are not allowing the customer to read. In most of the cases, even you all have not read. You all don't know simply what is there in the those documents as well. So the customer, since he want to get borrow the money, he will sign wherever you say. You get a signature for debt, amount in words and sorry, to the amount what you lend, interest rate, security, then the loan agreement date, right? So everywhere you try to get the signatures of the customers uh, without a reason and initials everywhere. So that could be one reason where if you are taking documentation on blank documents, thinking that if something goes wrong, we should be able to correct those. You get the initials as well. So if you can't submit this kind of documents to the courts, so if you submit, the court might ask why these initials everywhere. If you can't give a proper justification, then you are in trouble. So then the court will get to know you have taken signatures on blank documents, right? So then the other party will also argue, look here, I was forced to sign these documents without typing. So then you won't be able to prove that you produce a set of documents which they have completed, because each and every case you have initial. Initial should come if there is a correction, or if you want to get, if you have a practice of getting the customer's consent for that, you can have the initial. Other than that, there is no requirement for you to place the initial. But still, most of the time, the bankers they request customers to place initial everywhere in the loan agreements and the other connected document. Uh, in certain instances, even the customer's request letter, I'm requesting, I want a loan, you request for me to place initials all over the places. So then what happens? This is I'm signing this document. So do you need any initials for that? Not necessary, no? So it's very clear that sometimes the bankers are exercising, preparing documents without understanding the spirit of that document. And very simple mistakes, but it will lead where they can't go for debt recovery. So very clearly debt recovery says you have to have perfect set of documents without mistakes. If there are mistakes means you won't be able to go for debt recovery action. Any questions? Yes, any questions? Right. So what has happened to the others? Last session you all had a lot of questions and sessions, but today everyone is silent. Any reason? Yes. Hope you all are not none of you all are sleeping, no?
Must be after a heavy lunch, sir.
Don't have heavy lunch when you have classes. Right. Okay. Um, so the Parate execution is a procedure specially available for banks, which allows the resale of property mortgaged to the bank without referring to the court. Bank itself is given the power to hold an auction for the sale of the property by the appointed auctioneer and recover the outstanding. So your auctioneer can fix the auction, and based on the outcome, they can or the bank can go for auction. Now also you need to be a little bit careful. One point, now I don't know whether you all know, there are a lot of forged documents in the system, right? There are a lot of forged documents. So even there are deed of transfers, forged NICs, forged qualification certificates. If you want the MBBS, it's just 50,000, right? If you want NIC, around 5,000. So even the deed of transfer. Now, I don't know whether you all have experienced that. If you want to send your child kid to the one of the leading schools in the city limits, there are people who will prepare all the lease agreements and all the set of documents for 100,000. So they have all these stamps, they have all these seals, they have all the agreements to show, okay, and you can't even see whether these are forged documents. They are very smart. Each tenor, they have even the stamps, and they have all registrar seals. So once there was a college when they had the grade 1 entrance, they have gone through this lease agreements and the deed of gifts and the whatever the title deeds. So the Colombo registrar will say A Silva. So the name is right, but they have different signatures. So if A Silva is having one signature for all executed lease agreements should contain same signature, no? But there were a considerable amount of agreements where A Silva signature was different. So what they have done, the panel, initially they have identified the signature differences in the signatures, and only the current correct signature relevant documents were kept. Rest of the applications were rejected. So these systems are happening in around the system or around the country. So you need to be very careful. Now, in a particular case, here what has happened, there was a large land in Nigambo. It was no one was there. There was a person was kept to look after the property, and after some time, there was a banner in front of this land to say this is mortgage to expand, and they are going to auction this property. So at that time, only the real owner understood that this is under mortgage, which he has not kept. So it was very clear that someone else has prepared a document or deed of transfer, and they have gone and mortgage to the bank. So the bank has given the mortgage. And so we'll say I'm preparing a forged set of documents for your property, and I will go to the bank and I will mortgage those property or the property deeds, and I will get the facility. So from the day one itself, the installments were yes. So then the bank, next option, bank for go to Parate auction and recover the outstanding. That property amounted to a huge amount. Even this was 10 years back, and even at that time it was around 300 million or something. So what has happened really? Um, their customer has requested a small amount from the bank. Now, for an example, for a property where if the valuation is 300 million, you don't consider more than 150. Average is 50% is will be your margin. So more than that, you don't consider for any facility. So in this facility, customer has requested only 50 million. So then the banker decided, okay, it's up on the deal, whereas the property value is 300 million, and now this person is just want 50 million. Why not consider this facility? Right? Then the bank has given the facility after checking everything. Everything was perfect, and the ROC, Register of Lands, and they have given the facility from the day one itself. The facility is not served, and then the bank took a decision to go for parate and take action. So when the board was there to say that this is under auction, only the real owner understood that this has been mortgaged. So he has gone through details. It was a very connected team. It was happening for almost 4 to 5 years. They have planned properly with the support of the one minister of that particular area on a local council, and there were 1 or 2 connected parties in the land registry as well, and they have prepared a 4th set of documents, and they have registered those in another folio and done few transactions, and finally it has gone to the bank for mortgage. So unfortunately, the customer was not aware of any of these concerns. So at least they got to know when the banner was there to say this property is under this mortgage to X bank, and now we are going for parate auction. So this is the danger, right? So without the knowledge of the customer, sometimes people will prepare forged fake documents, and try to get the advantage out of that. So as bankers, you need to understand that you should not mortgage a property unless you have adequate evidence to see whether this property belongs to so and so. Right? So it's very important. Any questions on that? Any questions? No. Procedure is relatively quick, and it also gives the customer an opportunity to come before the bank during that interim period and settle the amounts due. So before the auction, if the customer comes to a settlement to pay the outstanding or part outstanding, those are permitted. Right? So then you can hold it. Therefore, the procedure is beneficial for the bank as well as the customer, as it removes the hassle of going through the court procedure for the bank and gives the customer an opportunity to save his property. So you're giving a lot of options for the customer to save the property, but in certain instances, customers, they don't take the advantage out of that. And also, in the recent past, because of the pandemic, there were several instances where the customers were given the opportunity to protect their properties, but they have failed. So one reason is where it's difficult to find people, it's difficult to find buyers. So maybe that you have the property, but if you can't find a buyer, then it's going to be a problem. Right? So though it seems to be there's a value on properties, I don't think there's a increasing demand for properties as well as these condominium properties. So you be careful when you're mortgaging, especially when you are lending to high-rising buildings. You have to be very careful because every 4 to 5 years you get a bubble on this property market, especially this condominium. Out of what I know is the what apartments what we have are more than the requirement. So it's more than the requirement. But people think no, there is a further requirement, and sometimes they might show okay, this is for investment purpose. They are marketing in that manner. So recently, I heard there was a high-end type of a property developer, and they are going to construct around 400 odd apartments. And in now, one of my friends have gone to purchase. It was around 65 million or something, one apartment. So when he went here, they have told, okay, these are sold, these are reserved, and most of these properties were reserved by the board of directors of that particular company. So I don't know whether the directors want to purchase or whether they are trying to show that these are reserved, right? Uh, just to create an artificial market. So, but somehow make sure that you have to be a little bit careful when you're purchasing a condominium property because those are high-rising buildings. You might pay the advance, and halfway, if they stop construction, what will happen to your advance? You won't be able to get a single cent. So until they 100% complete, there is no value in those properties. Because they will construct the structure and everything, all interior. If they don't put the lift, what happens? How can you go for 50 floors or 60 floors? So some basic things are important, right? When you are investing in a condominium property, due to electrical shortage or oil shortage, sometimes the lift is not working. So then what are you going to do if you are in the 50th floor, right? So those are practical reasons. And also you need to ensure that uh, you're investing if you're purchasing a property which already construction completed, fine. And you all know the construction cost is now booming. It's very difficult to start construction and complete. If you have decided, okay, I have 10 million, I can complete the construction within 10 million, definitely, I mean, at the point you are going to finish your work, it will go around 15 million. Now, cement, there is a huge shortage. The market price is 1,345, but there are people who are selling for 1,850 or so, black market. So be careful when if you're planning to purchase a condominium or if you're planning to give a facility to a condominium property, halfway chances are there, especially high rising. But if the company is a reputed company, they want to maintain their standards, and if you feel that they will not stop halfway, then no problem. But if they stop halfway, you will not be able to get a single cent out of that particular property. So you can lend, but don't lend too much on one condominium. If the condominium property is completed, no problem. Then you know that this is in existing one. You will be able to, or your customers will be able to occupy and continue their work. But if it is still just the foundation, even not the foundation or piling is not yet completed, and if you are investing in the 50th floor room or apartment, what happens if they stop piling? What happens if they stop halfway? You will not be able to get a single cent. So my personal advice, if you really want, you can go for an apartment, but where you have 3-4 floors, even you can walk the stairs. But a high rising, if you want, now maybe sometimes people might say, okay, all luxurious things are there. So you get the gym, you get the pool, right? All that in that particular restaurant, apartment, all international restaurants are going to come. So until they comes, we don't know, no, right? So you have a lot of facilities, but do you have time to use those facilities is a question. Now, majority of you all are using the Apple phone. Now, as do you know all the features of that Apple phone, or do you use all the features of this Apple phone? Maybe that you are going for WhatsApp, right? Using the WhatsApp, SMS, your mails, your calls. So those are the main 4 features that you get from your so-called Apple phone. Though the other features are there, you don't have time either, or you're not using it because you don't know how to use it. But those 4 basic things, even you can get it done from this around 25,000, 30,000 Chinese phone. So do you want 100,000 odd phone for to get those things done? So the luxury items are okay. You will get a very sophisticated gym and all restaurants will be there. So do you have time to go and enjoy all those things is a question. So my personal advice, if you want to buy a land, yes, buy a land and do a construction. So if you have 60 million, for 60 million, you can construct a huge luxurious house, right? So why do you want to spend then, and on top of that, this particular uh, apartment is carrying only 850 odd square feet. So there can be people who are willing to buy, but be careful when you are giving facilities. You need to ensure that there is a market demand until the customer pay the facility. So if you are giving, don't lend everything for one apartment. You can spread your risk. Sometimes you have given the facility for the developer, and based on that, you give more and more facilities to your clients. But the money comes to them by step by step, but in stages. So then what happens? If a boom comes, you will not be able to do anything. And top of that, if the restriction comes from the government with regard to the construction, they will have to hold for a certain period. So these are the challenges, market challenges that we face from the environment. We need to have an understanding over those as well. Now, you don't have to be as a CID officer thinking all the possible options, but these are straightforward common sense options. When you see the market condition, you should be able to answer the question, how are they going to do the construction? If there is a shortage in cement, the government might say, okay, we were going to find a solution within a short period. But along with all solutions, there was a price hike. Gas, it was provided, but I don't know whether the laugh is still there. And there was a price hike. All this, what you call transportation, bus fees, matter sorted, price hike. So even the cement problem, they can find solutions. They can come to the market, but with a price hike. So if the customer has already committed, or if the company has already committed, okay, they are going to construct this building for 40 million, and due to the increase of this cost, what happens? Then there will be additional burden on you. So be careful these days, especially when you are lending to condominium property. And personally, if you are going to buy condominium property, my personal advice not to buy condominium property. Okay, any questions? Yes. So these are the steps. Letter of demand is served. Resolution to be adopted by the director board of the bank. So all the facility, amount, property details, schedule, everything has to be tabled at the board level. Notice of resolution shall be published in the Gazette in at least 3 daily newspapers in Sinhala, Tamil, and English. Copies of such notices shall be dispatched to the borrower, other persons. Notice of sale, notice of the date, time, and place of the sale 14 days before the date fixed for the sale be published in the Gazette, and copies of such notices shall be dispatched to the borrower, posted or on or near the property of the to be sold. So you paste a notice to say that this property is under auction of X bank. So you're declaring the interested party and you're placing a notice. Payment before sale, auction has to be cancelled. Upset price, the board has to fix an upset price below which the property shall not be sold to any person other than the bank. So you need to fix the upset price is the price that the bank requires to get from this property. Now the point is where if the property value is 500 million and if your outstanding is just 100 million, you can't sell the property for 100 million. You have to ensure that you get the proper valuation and you have to claim for the right price. So if the value is 500 million, at least you should be able to pay sell the property for around that, right? And otherwise what will happen, but you can't sell the property for a lower amount where the outstandings may be just 10 million. So you can't tell 50 million worth of a property for 10 million because your outstanding amount is small, right? So you need to ensure that you sell it at the right price, and any difference after you settle the outstandings of the loan should be given back to the customer, because it's very important that we need to protect the customer's interest, right? You can't do what you want or you can't sell it at a lower price than the real market price. Right. Then auction, condition of sale, auctioneer, certificate of sale, board of directors, amendments 1 of 2011. No action shall be initiated to recover any loans in respect of which the default is made where the capital amount of such loan is less than the rupees 5 million. So time to time there were changes to this rule. If the capital amount outstanding is less than 5 million, we will not be able to go for a parate auction. So you have to be a little bit careful. Sometimes the customers, what they do, they are maybe 10 million facility. They reduce their capital for less than 5 million and they default. So then at that time, you can't go for parate auction. What is available is the money recovery action. Sorry, mortgage bond action, which will take another 9 to 10 years time. So that is an area that you have to be careful. If the capital sum is less than 5 million, you will not be able to go for this action. And also, if the property belongs to another person, I am the borrower, my spouse is the owner. So in such an instance, the bank can't go on parate, those we called as third party property. Therefore, unless you have an interest, and that clearly shows in case if a third party is owning, sometimes the third party has not got any benefit out of that. Only one party has got the benefit and there is no benefit for the third person. So to avoid that, they say either the property has to be in the name of the person who mortgaged, or at least a joint type of an account, joint type of a relationship, right? Especially in case of a company director's property, you can. We don't consider that as third party. In case of a company, if you are giving mortgaging a property belongs to someone else, not a director. So in such instances, we consider that as a third party security.
Mr. Senaratna,
Yes.
for companies, is there any shareholding threshold to go for parate to apply the parate execution? So, say if the director is having only 10% shareholding and that director's property has been mortgaged, can we go for parate?
Yeah. So if the irrespective of the director's shareholding, finally I'm the director. My property I have given to my business. So I'm the person who is getting the benefit out of that. Maybe I can have 100% ownership, or I can have less than that. So far, I don't think the court has gone up to the extent of analyzing the percentage of shareholding. Why is there any concern that you have? Why you raised that question?
Yeah, Mr. Senaratna, I actually once I have a experience that the lawyers request at least we need to have 50% shareholding. Other than that, we can't go for parata.
Yeah, on the normal
Okay.
practice, they ask for 51% for the particular director who's going to mortgage the property.
Okay.
We also experience that kind of things.
Okay. Maybe there would have been some subsequent judgment over that. So substantial now under the Companies Act, the substantial shareholding is 10%, above 10%. But here, if you are going to show that the director is having more than 51%, means he is the major shareholder of that company. So maybe that they are trying to argue, unless you are the major shareholder, you can't say that out of the company's profit, majority of the profit comes to you if you have less than 51%. So that is a possible, I'm not sure whether there was a court order to that effect, but it's a prudent approach rather than you go for parate auction, and if you fail that, to say that there is no substantial ownership of the director with regard to the company. So that's a prudent approach. I'm not sure whether this has been tested in a court of law. So it makes sense. I'm the major shareholder. I'm holding more than 51%. So it's obvious I'm getting majority of the profit of the company. So I have kept my mortgage to the company and mortgage to your bank. And since I'm getting the majority of the benefits out of the company, you will consider me and the company both are the same. So it's not considered as third party. I will little bit go in detail and see whether there was any judgment or not. According to my knowledge, I'm not sure. So I will check it, but it makes sense.
Yeah, there's
Yes.
another small clarification, sir. This
Yeah.
joint relationship, how do you consider, like you can take husband and wife, or the father and son, or mother and son, or the brothers, or those kind of relationship we can take easily. But if there is another third party person who's joining as a joint party, I'm not talking about the companies, I'm just talking about the joint loans. So do you consider that relationship, or is there any limitation for those such relationships when you are considering bank the credit facilities?
No. What normally now when the rule came with regard to third party, what the banks they did now, for an example, it may be my spouse property, I'm taking a loan, so it's third party. So you can, any person can argue, no, it's your spouse, you will get the benefit and the benefit will come to the family. So banks, they didn't want to take that risk. What they did was they made my spouse also a co-borrower. So then the facility is in the name of me and my spouse, where the spouse's property was kept under mortgage. So it's establishing your relationship is not so required, but we have to see finally whether the joint party got any benefit out of the facility. So sometimes my spouse not got any benefit out of that, but since she is a party to this particular facility, she can't later object. She can't say, look here, I never got any money, because she has signed as a borrower, right, as well as the mortgagor. So then she can't deny the fact that she never got any benefit out of that. Even the third party, it's the same. I can do a business with you, right? So we are having a joint account. So your property, I'm the borrower. So what the bank will do, they will bring you as a borrower, and finally you and me has borrowed against your property. So on a later stage, you can't say, look here, I never got any benefits out of that, because you also a co-borrower. So I don't think that the court have gone up to that extent to establish the relationship. What is the relationship? But finally, what you have to prove, even the joint party or the property owner also have taken a advantage out of that. So that's proving is not easy, because those are substantial. It's difficult to prove, because how do we know whether you got the benefit though you are a party to the facility? I don't think that they have gone up to that extent, Kumudu.
Now, this evaluation is very important. I mean, when you do pre-credit and post-credit monitoring, now it's very important, because sometimes we see the practical situations of money lenders. What they do is they give money, then thereafter they bring the person as a joint borrower and try to take a facility from the bank, and thereafter, there may be some default cases. Sometimes, if we know that person is a money lender, we never burned our fingers, but still there are situations.
Yeah, definitely. In this current conditions, so many things can happen. So what you're trying to say is, money. How this money lender come into this facility? Can you a little bit elaborate, Kumudu?
Now, sometimes they give money. I mean, they
Okay.
lend money to the third party, right? So
Okay.
if that person cannot pay, right, for their
Okay.
dues, what they
Okay.
do is they bring up property along with that person. I mean, that third party's property to the bank, and they are trying to be, I mean, like the joint borrowers, and the money lender, obviously they have sort of cash flows. No, they can always show that, because they are having operating current accounts and all those things. So eligibility criteria is there with the money lender.
Okay.
The other
Okay.
third party person may not having anything to prove for his the repayment capacity, but still,
Okay.
so they try to mortgage that third party property person who has lent, and
Okay.
then default. So then that third
Okay.
party will not be able to pay, no. So those
Yes. Yes.
kind
Yes.
of things are happening in,
Okay.
sometime maybe in Colombo also it's happening.
Hmm, hmm,
Some
hmm.
rural areas, that is, we see that those things are happening, but we are very careful when we are approving credits.
So but maybe the reason that you wanted how to establish the relationship. So now even two non-connected two parties can do businesses, no? So it's very difficult unless you know that it's a money lender. So that's the challenge, no?
Yeah, that is the challenge the bankers
Yeah.
having.
Yes. So now when you go through the title, there can be instances where now there are a lot of transactions that goes up and down. අපි ඕක සිංහලෙන් කියන්නේ උන්චිලි පදිනවා කියලා. ටයිටල් එකේ A B ට දෙනවා, B A ට දෙනවා, A B ට දෙනවා, B A ට දෙනවා. So it keeps on moving. ඕක ටයිටල් චෙක් කරනකොට අපි කියන්නේ මේක උන්චිලි පැදලා කියලා. So I'm giving you money, you are transferring your property to me. Once you settle, I'm giving back the property to you. Once again, when you want a facility, you transfer the property to me. So before you consider the facility, just check the title. Then if you have this kind of doubts, you will get to know whether this is something to that effect. Right? If previously the same person have done, and if the that person is coming as a joint borrower, then you will have a clue. Okay, there was previous history shows that he is also a money lender. So normally in rural areas, of course, you the branches, they know who are the money lenders. But when you come to Colombo and the main cities, it's a little bit difficult, right, to find. But if you are a money lender in a rural area, everyone knows about you, and it will be easy for you to identify, as you said. But in Colombo, there may be a lot of things are happening because of this forged set of documents. Interesting. Anything else? Any questions? Any inputs that you can give?
So there was another question I wanted to ask you earlier. This mortgage bond, not the mortgage bond action, money action for the clean facilities. How do you proceed with the money action? If we are not mortgage anything.
Yeah, clean facilities. Now, have you taken a agreement?
So we normally do get DPN and
What do you mean by DPN? What do you mean by
demand
DPN?
promissory note.
Promissory note. Okay, promissory note.
We
Okay.
take from customers and the letter offer. Then again the loan application X1. Those
Loan
are the
agreement.
documents. Yeah.
You have the loan agreement. So that's not an issue. Now the only concern is where you are going to prove that at my request you have given a facility where I have signed the pro note, loan agreement, and the offer letter. So
and
that's
also
enough.
you will have to have that asset declaration for that particular customer, no?
Asset declaration is a must. I will show you in my next set of slides what are the basic set of documents that you have to get from a customer when you're giving a facility, right? So the concern is where finally you have to prove that you have given me at my request, you have credited my account, and I have utilized that money. So as far as you can prove that particular point, that's more than enough. So there is no requirement for you to have a security for you to go to courts. Only thing, if you have a security, then you can execute on that particular security and claim the money after acquiring. You can sell it and you can get your outstanding. But if you don't have a security, there is nothing. Promissory note or a pro note means payable on demand. So if the customer says, I don't have money, what are you going to do? So it's normally what we take is just a piece of papers. Bankers must understand that we can't do magic with this little piece of papers. I will sign any number of documents for you, right? But at the end of the day, if I don't have money, can you take a single cent from me? No, you can't. So then what are we going to do with this set of documents what you have obtained? People might say, no, it's rare, but it may be rare, but you will have practical issues when realizing once a customer says, look here, you do any action, you take any action, I don't have money. So these days you can get that type of customers. I lost all the businesses, you take any action. So you can take me to courts, you can win the case, you can get the writ of execution. After that, what are you going to do? You can send your fiscal and get what is available in my home. Sometimes they don't have anything at home as well. So this is the challenge what we see. It's not easy. It's not an easy process. One reason that we allow the customer to drag the case. When you go for money recovery, it will drag for 4 to 5 years. But under debt recovery, it's very quick. So if I'm bad today, if due to some reason I was doing well, from today onwards, due to some reason, economic condition reason, from today onwards, my business is not doing well. Let's say I'm importing drugs from India, particular drug. Now government decided not to import that particular drug from tomorrow. So it will affect my business directly from tomorrow, no? So then the problem is where if you take me to courts under debt recovery within a shorter period, I will somehow try to settle you than the others, because others are taking the normal money recovery action. So to file the summons, everything, it will take more and more time. At least for me to file answer, I will have a breathing time of 1 year. For debt recovery, within 1 year, everything will be over. So definitely the person who tried first will get the advantage. and he will be able to get more money. So this is the requirement that we have to should be understand. We have to be quick. As soon as possible, you try to claim the money from the defaulter. He will somehow try to bring money and settle. Now just imagine situation. Now all of you all have homes, no? Houses. All of you all have houses. Yes, your own house.
Yes.
Yeah. Is it 100% perfectly completed, or are there any one or two switches or lights still you have not completed for the last 10 years? Yes. Are there certain area for you to complete yet? So you do the biggest difficult areas, and you sometimes you neglect or you don't have money to complete the balance areas. So from the inception itself, if you plan properly from how we are going to get them recovered outstanding from the customer, right? Even at a bad time, as soon as you go and claim, and the customer will try to put all his money what is there with him and try to settle you first. But with time, he will have a lot of problem with the other borrowers as well, lenders as well, which he will not be able to pay. So first come first serve is the basis. So as soon as if you can take action, chances are more that you will be able to recover the outstanding in a short period. The more you delay, sometimes you forget about that, sometimes you don't, you see the issue but you are not addressing. That's what normally happens. Have you all taken fire policies for all of your houses? Yes. Do you all have a fire policies? I know this is not a question that I have to ask from the set of bankers. Do you have, you said you have homes? Yes. Do you have fire policies? Yes or no?
Yes, because properties are mortgaged.
Yeah, but fire policy you have to renew annually.
Yes.
Are you sure that it gets renewed?
Yes.
Yeah. Nilanda? Priyantini? Sorry, Priyakanti? You
haven't fire policy, sir.
You have?
Have not.
Yeah. So you have a house, but you don't have a fire policy.
Yes, sir.
Yeah. So you are taking huge risk. Yeah. You are taking huge risk. So from tomorrow, because the cost will be for even for 10 million, it will be around 10,000 for a year. So you divide it by 365 and see what is the amount for a day. I will take one example. There was one of our known officer in the sense he was a court assistant. He had a lot of problems as well, but then he started a small hardware where her wife was running the business, and he gave his support during the weekend. So he was telling me, now we are doing a good job. Now our total, he started from the scratch. One particular day he was telling me, now we have around 4 million assets. So they have gradually increased up to 4 million. After 1 or 2 months, he was telling me, so see what happened to me. The entire building got a fire, and he has lost everything. He was able to protect only 25,000. On top of that, he has not taken a fire policy. So then just see, from the scratch he started, went up to 4 million. And once again, he has to start, came back, and just only 25,000 was left. Hardware items normally get, there were paints and other thinner and so many other things. No, they couldn't stop the fire. So just see, in vain. So make sure that maybe you are having a fire policy, but if you're not renewing it, it's a problem. Sometimes the banks, they don't know, but recently what I have seen, you don't get this renewal notices. unless you go behind them and see whether this has renewed or not. There is no standing order methods. Be careful on that aspect, right? So finally, you will lose a huge amount without a reason. You spend all you what you have and do a huge construction, but you fail to get a insurance policy. Cost is nothing comparing to your investments, right? And this is also another method, but unfortunately I can't say it's right to do this type of a method, but there are provisions in the Companies Act for creditors winding up. Now if I'm for you, I'm a creditor, I'm not paying you, sorry, for me you are a creditor, you have given me facility. So what you do, since I'm not paying, you go to courts and you request the courts to from the courts to wind up my company, right? Because if you prove that if I allow me to continue the business, there'll be more and more problems, and requesting the court to close down my business. So then what happens? I will lose the entire business because of your outstanding. So as soon as you initiate the action, following day I will come and somehow I will come and settle your outstanding. So this is also a method available for bankers, for creditors winding up. You're proceeding as a creditor to wind up my business. So I'm losing everything. So once you initiate it, following day the customer will come and settle. So this provision is available. Sometime back we did this for one of our finance companies. Following day the customer came and settled everything. So, yes.
What if that company is having any other bankers as well?
Yeah. So what happens when the court declare that this company is going to wind up, then you all have to lodge your claims as well. Other banks also have to lodge their claims. Right. So that's why now there is an additional job for all the banks. They have to check the papers and see whether there are any of their clients are under winding up process, because you need to lodge. And if you are a secured creditor, that's fine. If you're not a secured creditor, sometimes without your knowledge the company will close down the business. So there has to be a mechanism by your recoveries team to go through the papers and see whether there are any customers that you have given facilities are in the process of closing down the business or creditors winding up. So all the creditors must submit their claims at that time, and the court will decide based on the priority order who will get the first priority, and proportionately they will get the money. So at the time of liquidation, right, there is a liquidation process. Now normally what happens, the employee salaries has to be paid, then the EPF, ETF or the statutory payments you have to pay, then the government taxes, then come the secured creditors, then come the unsecured creditors, and then come the debenture holders and the shareholders. So always the banks must ensure that they secure the seat of secured creditors, right? So at that time, at the point of liquidation, the court will see who are the secured creditors, who are the unsecured creditors, and based on that they give an order to proceed. Maybe that you have a property, it is secured. So in such an instance, you will be able to get the advantage out of that, and you will be able to sell the property and get the outstanding. But at the same time, you have to understand that though you have the property, don't think that you are secured. Continuously, you have to get hold of the required information yearly from the customer. Now, if the company has not paid their employee salaries, and if there's unrest within the organization, and if they have not paid the EPF and ETF and the statutory payments as well as the government taxes, court can give an order against your property to say, bank, you forget about your outstanding, we will sell the property and first we want to settle the outstandings of the employees and the related parties, right? So at that time, even though you have the ownership or the priority, sometimes you will not be able to get any advantage out of that. So that is the danger what we see in this process. So you are secure, you are happy that you think we are a secured creditor, no problem. But even a secured creditor will have problems in case if the company has not paid their basic liabilities. Therefore, you need to ensure that the companies, they don't have any outstanding in their employee salaries, ETF, EPF, and especially you need to get hold of the annual return to see whether there are any other liabilities also. Any questions?
Sir, can another creditor object for the winding up?
Objections can come. So the court will decide whether this is a fair request by me, or whether now there can be instances where my facility, my bank facility is just 10 million, whereas the other bank facilities are more than that, right? So if the other parties are objecting for that, the court can stop that as well. But if you are the main customer, if you are the main bank, then you will have a better edge than the other banks, because the other banks might say, okay, they are continuing properly, they are paying properly, uh, um, there is no problem, so they can object. Now anything can happen in court of law. You can object, you can agree, you can disagree. So finally the court will decide whether this is a fair request from my bank, whereas he is serving all other banks. So then at that time, court might give instructions to customer, why not you settle this outstandings? They can object.
Thank you, sir.
Okay. Any other questions? So thus the lending bank has statutory right to present a winding up petition to court if it is indebtedness has fallen due and not been repaid by the debtor company. The court must be satisfied that the debt is currently due for payment. So please make sure that the current outstanding or the amount has to be due. Otherwise, you can't claim from the courts. And also, what I have seen in certain instances, when you get what do you call this inland revenue orders to seize the accounts, how do you approach on that? What is your approach? If there's a customer, okay, maybe we'll assume that he's the best customer. So there's a loan outstanding due on 30th February. Sorry, 30th March. So you get this court order on 29th to seize all his accounts. Now as a banker, what do you do? Do you straight away on the 29th you hold everything, or you drag till 30th morning and recover your loan outstanding or loan arrears and freeze the balance? What is your approach? Yes, can someone share your views? What should be or what really happening? Yes, Chandima? Kumudu? Kumudu, when you get a court order or an inland revenue order, what is the first thing that you have to do?
You have to lay on the accounts.
Yeah, so now my example is where today you get, tomorrow, you know, there is a premium due, installment due. What are you going to do? Are you going to hold today or wait till tomorrow morning, and after recovering your outstanding, when the reversal run goes, you are holding the balance?
Tomorrow you can't do anything.
Yeah.
So now you have a chance to take it on the same day, but forcefully you have to recover. No? So
No, you can't forcefully until it gets due. You can't recover.
yeah, that is also there.
Yeah. Yeah. So normally, one important thing: be careful when you get a court judgment or inland revenue order. You have to act quickly, right? If you allow a customer to withdraw, or if you are recovering your outstanding and holding what is remaining, it's a huge issue. You are taking a huge risk. So you can request the customer courts and see there is a due amount. Out of that, we are going to recover this amount. But don't hold it for tomorrow, because there may be the customer will get the information, and following day when you want to seize, nothing will be there. You will not be able to recover anything for even for your loan outstanding, loan installment. So you are taking a huge risk. As soon as you get the document, make sure you enter into a book and place the seal and request the officer to take appropriate action, and that has to be entered in a book. Yes, you have to be extra careful when you're handling this inland revenue and court orders. I have seen in certain instances, officers, they take it, put it in the drawer, and after 1 or 2 weeks only, they realize they have not taken any action. By the time, if the customer has taken money, all the money, then there is a problem. So recent past, the inland revenue had a tactic. Now, for an example, if I'm not paying taxes, if there's any tax due, they instruct all the banks to freeze my accounts. So then what happens? Straight away, I have to go to the inland revenue and come for a settlement. And first, I have to pay the due taxes, and after that only they will request the banks to release the freezing order. So that is a tactic, because now all these are connected. Banks, your FIU reporting is connected to inland revenue. So then they get to know all your transactions. Any transaction above 1 million, it goes through inland revenue as well. So this is the tactic that they use. Sometimes your inland revenue orders are much more higher than the normal legal court orders. So that's how they are recovering the outstanding of the customers.
Many banks are now centrally handling all these things.
Okay.
We branches, actually, I'm also not have the branch experience, but the branches are not getting inland revenue notices very often.
Okay.
We get it. I mean, there is a separate department to handle, and inland revenue also knows that, so they are directly sending it to that
Okay.
department.
Okay.
So
Yeah,
they're
got it.
centrally doing all this blocking and putting lien and all that. They do. So
Yeah,
it's
that's
very
then
very good method, because otherwise what you said was very correct. When we were doing branches, sometimes officers really they are, with their negligence, we'll have to go to the courts and say, I mean, sometimes we'll have to face a lot of difficulties because of these negligences. To avoid that only they are doing, I mean, these things are centralized now.
yeah, even centralized, you have to have checks and balances, right? Even maybe that particular officer, all of a sudden he got a call from home to say that so and so is sick. He has put that onto the drawer and gone. So whatever you get during the day, you have to ensure that you have taken appropriate action. So that's also important. Now I can remember one bank. Now this officer was telling, now they take this insurance policy. There was a insurance policy for that particular building. So this officer is the person who is monitoring, and the insurance is taken by another department. Now when I asked from him, have you taken the insurance policy? He was saying, yes, no problem. I have given instructions to the respective department. Now what he has done, he has given the reminder, but no follow-up. Now just imagine that kind of a situation. He says, no, I have done my role. Then I asked, what is your role? No, I gave proper instructions. I sent the mail, but then I asked whether, are you sure that they have taken the policy? No, that of course I don't know. So how can you say that you have done your role if you don't have a follow-up? Today what has happened, the biggest issue is there's no follow-up. People say certain things that you have to do, but if you don't have a follow-up, you don't know whether it has happened or not. So there is a danger. It may be the biggest building in your asset book, your own building, and if you don't get the fire policy on time, if there's a fire and if everything goes for a 6, what happens? Yeah, it will be billions and billions. So unfortunately, in companies, in certain banks, they have used the most junior person to renew the insurance policies. So sometimes they don't understand the gravity of that. So you need to ensure that you give the authority to a respective higher person and make sure that all your policies are up to date without any problem. If something goes wrong, you will lose your entire building, millions and millions. So sending a reminder will not make any sense, no, unless you get a copy of the policy and file it that to see that whether they have done it or not. So a lot of reminders go from bank employees to the respective units, but no follow-up. So be careful. That is also very important when you come to handling day-to-day business of your key activities. Any other questions? Okay, circumstances in which a company is deemed unable to pay its debts are if it is not complied with the statutory demand, if execution of judgment or other processes issued against the company is returned unsatisfied, it is proved to the satisfaction of the court that the company is unable to pay its debts as they fall due, and in determining whether the company is unable to pay its debts, the court shall take into account the company's contingent and prospective liabilities. So the court, if I'm answering your question to someone, it's a court will take the call whether this is a reasonable request, and after analyzing all his liabilities with the other banks as well, to whether it's prudent to go for a winding up process. Okay.
Okay, sir.
Right. Any questions? Okay, then we'll have a break. Come back by 3:30 because I want to get this some videos. I just want to show you all videos as well. Few videos to understand how these things are happening in the market. And I promised you last time that I will show the Wells Fargo video clip. I hope that I can share because there is a technical issue. Because Wells Fargo will show you how important for bankers to go behind numbers and achieve their performance-based rewards. Okay, so please come back by 3:30. Right, thank you. Yeah, so this is
The video
what's
is not
happening.
playing, no? You can
No, it's not that. Yeah, I just want to play now. Just give me 1 minute.
Screen is
So
visible. Yeah.
okay. Yeah. Now just see whether you all can see the video.
What is the credit crisis?
Yes, sir.
It's a worldwide
Can.
financial fiasco
Can.
involving terms you've probably heard like subprime mortgages, collateralized debt obligations, frozen credit markets, and credit default swaps. Who's affected? Everyone. How did it happen? Here's how. The credit crisis brings two groups of people together, homeowners and investors. Homeowners represent their mortgages, and investors represent their money. These mortgages represent houses, and this money represents large institutions like pension funds, insurance companies, sovereign funds, mutual funds, etc. These groups are brought together through the financial system, a bunch of banks and brokers commonly known as Wall Street. While it may not seem like it, these banks on Wall Street are closely connected to these houses on Main Street. To understand how, let's start at the beginning. Years ago, the investors are sitting on their pile of money, looking for a good investment to turn into more money. Traditionally, they go to the U.S. Federal Reserve, where they buy treasury bills, believed to be the safest investment. But in the wake of the dot-com bust in September 11th, Federal Reserve Chairman Alan Greenspan lowers interest rates to only 1% to keep the economy strong. 1% is a very low return on investment, so the investors say, no thanks. On the flip side, this means banks on Wall Street can borrow from the Fed for only 1%. Add to that general surpluses from Japan, China, and the Middle East, and there's an abundance of cheap credit. This makes borrowing money easy for banks and causes them to go crazy with leverage. Leverage is borrowing money to amplify the outcome of a deal. Here's how it works. In a normal deal, someone with $10,000 buys a box for $10,000. He then sells it to someone else for $11,000. For a $1,000 profit, a good deal. But using leverage, someone with $10,000 would go borrow $990,000 more dollars, giving him $1 million in hand. Then he goes and buys 100 boxes with his $1 million and sells them to someone else for $1,100,000. Then he pays back his $990,000 plus $10,000 in interest. And after his initial $10,000, he's left with a $90,000 profit versus the other guy's $1,000. Leverage turns good deals into great deals. This is a major way banks make their money. So Wall Street takes out a ton of credit, makes great deals, and grows tremendously rich, and then pays it back. The investors see this and want a piece of the action, and this gives Wall Street an idea. They can connect the investors to the homeowners through mortgages. Here's how it works. A family wants a house, so they save for a down payment and contact a mortgage broker. The mortgage broker connects the family to a lender who gives them a mortgage. The broker makes a nice commission. The family buys a house and becomes homeowners. This is great for them because housing prices have been rising practically forever. Everything works out nicely. One day, the lender gets a call from an investment banker who wants to buy the mortgage. The lender sells it to him for a very nice fee. The investment banker then borrows millions of dollars and buys thousands more mortgages and puts them into a nice little box. This means that every month he gets the payments from the homeowners of all the mortgages in the box. Then he sicks his banker wizards on it to work their financial magic, which is basically cutting it into 3 slices: safe, okay, and risky. They pack the slices back up in the box and call it a collateralized debt obligation, or CDO. A CDO works like 3 cascading trays. As money comes in, the top tray fills first, then spills over into the middle, and whatever is left into the bottom. The money comes from homeowners paying off their mortgages. If some owners don't pay and default on their mortgage, less money comes in, and the bottom tray may not get filled. This makes the bottom tray riskier, and the top tray safer. To compensate for the higher risk, the bottom tray receives a higher rate of return, while the top receives a lower, but still nice return. To make the top even safer, banks will insure it for a small fee called a credit default swap. The banks do all of this work so that credit rating agencies will stamp the top slice as a safe, AAA rated investment, the highest, safest rating there is. The OK slice is BBB, still pretty good, and they don't bother to rate the risky slice. Because of the AAA rating, the investment banker can sell the safe slice to the investors who only want safe investments. He sells the OK slice to other bankers, and the risky slices to hedge funds and other risk takers. The investment banker makes millions. He then repays his loans. Finally, the investors have found a good investment for their money, much better than the 1% Treasury bills. They're so pleased they want more CDO slices. So the investment banker calls up the lender, wanting more mortgages. The lender calls up the broker for more homeowners, but the broker can't find anyone. Everyone that qualifies for a mortgage already has one, but they have an idea. When homeowners default on their mortgage, the lender gets the house, and houses are always increasing in value. Since they're covered if the homeowners default, lenders can start adding risk to new mortgages, not requiring down payments, no proof of income, no documents at all. And that's exactly what they did. So instead of lending to responsible homeowners, called prime mortgages, they started to get some that were, well, less responsible. These are subprime mortgages. This is the turning point. So, just like always, the mortgage broker connects the family with a lender and a mortgage, making his commission. The family buys a big house. The lender sells the mortgage to the investment banker, who turns it into a CDO and sells slices to the investors and others. This actually works out nicely for everyone and makes them all rich. No one was worried because as soon as they sold the mortgage to the next guy, it was his problem. If the homeowners were to default, they didn't care. They were selling off their risk to the next guy and making millions, like playing hot potato with a time bomb. Not surprisingly, the homeowners default on their mortgage, which at this moment is owned by the banker. This means he forecloses and one of his monthly payments turns into a house. No big deal. He puts it up for sale. But more and more of his monthly payments turn into houses. Now there are so many houses for sale on the market, creating more supply than there is demand, and housing prices aren't rising anymore. In fact, they plummet. This creates an interesting problem for homeowners still paying their mortgages. As all the houses in their neighborhood go up for sale, the value of their house goes down, and they start to wonder why they're paying back their $300,000 mortgage when the house is now worth only $90,000. They decide that it doesn't make sense to continue paying, even though they can afford to, and they walk away from their house. Default rates sweep the country, and prices plummet. Now the investment banker is basically holding a box full of worthless houses. He calls up his buddy, the investor, to sell his CDO, but the investor isn't stupid and says, no thanks. He knows that the stream of money isn't even a dribble anymore. The banker tries to sell to everyone, but nobody wants to buy his bomb. He's freaking out because he borrowed millions, sometimes billions of dollars to buy this bomb, and he can't pay it back. Whatever he tries, he can't get rid of it. But he's not the only one. The investors have already bought thousands of these bombs. The lender calls up trying to sell his mortgage, but the banker won't buy it, and the broker is out of work. The whole financial system is frozen, and things get dark. Everybody starts going bankrupt. But that's not all. The investor calls up the homeowner and tells him that his investments are worthless. And you can begin to see how the crisis flows in a cycle. Welcome to the crisis of credit.
Hope that you saw what happened during the US in 2007 2008. I will go a little bit in detail to that. I just want to show another video clip. Just give me 2 minutes for that. Can you all see a video clip?
No, sir.
1 minute. Now can you all see?
Yes.
Okay, just give me 1 minute.
We know that money doesn't grow on trees, but Wells Fargo customers have found that bank accounts do appear out of nowhere.
I mean, it's a bank, right? They're supposed to keep track of people's money, safety, security.
Welcome to Watch Mojo News, the weekly series where we break down news stories that might be on your radar. In this installment, we're counting down 5 crucial facts you should know about the Wells Fargo account scandal.
If they really didn't know, then that tells me this is a bank that is simply too big to manage.
Number 5. What is Wells Fargo? Wells Fargo is considered one of the big 4 banks in the United States, along with JP Morgan Chase, Bank of America, and Citigroup. According to RelBanks, Wells Fargo was the largest bank in the world in 2015 in terms of market cap, operating in 35 countries and serving over 70 million customers worldwide. In fact, Wells Fargo was ranked as the 7th largest public company on the planet by Forbes in 2016. The bank, which today is headquartered in San Francisco, has its origins in the mid-19th century gold rush. It was founded by Henry Wells and William Fargo, who were also part founders of American Express in 1852. In its early years, Wells Fargo was one of the few banks to survive the Panic of 1857, which saw a collapse in the banking system. In recent years, a series of controversies has dogged the brand, including fines for overdraft issues administered in 2010, allegations of racial discrimination in 2011, inadequate risk disclosures in 2012, and violations of New York credit card rules in 2015, as well as high-profile revelations in 2014 surrounding the earnings of executive figures. Number 4. How was the fraud committed? In September 2016, it was revealed that employees at Wells Fargo had been covertly creating and operating extra bank accounts without customer authorization. An investigation found that at least 1.5 million bogus accounts and over 500,000 credit cards had been opened since 2011 without customers' knowledge. The fraud was committed as a means of not only making more money for the bank, but more importantly to boost sales figures so that employees involved could reach quotas and qualify for incentive bonuses. It's reported that in some instances, fake PIN numbers and email addresses were used in order to sign customers up for services without their knowledge. Wells Fargo has taken responsibility for the problem, which has been blamed by some critics on the incentives given to employees, and also seemingly results from inadequate monitoring, checks, and control procedures.
Either they knew or they didn't know, in which case, how can you run a giant multinational bank?
The bank has been hit with $185 million in fines, $100 million of which goes to the Consumer Financial Protection Bureau Civil Penalty Fund, and it's been ordered to pay a further $5 million as compensation to the customers affected. Number 3. How did the scandal affect customers? In many cases, the extra accounts initially went unnoticed or unquestioned by customers. Small amounts of money were typically transferred from an existing account when the fraudulent new one was opened, a transaction that didn't always draw attention. As some phony accounts were then closed within weeks, customers remained unaware that an extra product had ever been added. However, many people found themselves receiving credit or debit cards in the mail which they hadn't asked for, and being charged fees for accounts they had no idea existed. In some extreme circumstances, it's reported that customers were contacted by debt collection agencies in relation to outstanding fees on unrecognized accounts. Analysts suggest that the dupe was made easier thanks to Wells Fargo's long-established reputation for cross-selling to existing customers. The company looks after banking, loans, mortgages, and credit cards, and reportedly places focus on selling additional services to customers they already have, rather than capturing brand new clients. Number 2. What has Wells Fargo done to fix the problem? Though the bank has neither admitted nor denied the accusations, Wells Fargo has agreed to pay the fines and is expected to change sales practices and incentive structures as a result. At least 5,300 employees have been fired since 2011 for, quote, inappropriate sales conduct in relation to the scandal. And Wells Fargo has promised to assume greater control over and monitoring of customer service. In a memo sent to employees on September 8, 2016, the firm said when it makes mistakes, it is, quote, open about them, and also confirmed that it would, quote, take action. Wells Fargo has also begun repaying all customers involved, reporting that $5 million is earmarked for remediation, with $2.6 million already paid out. The average payment per customer is $25. The bank has also stressed that it has refunded or will refund any account where there is the slightest suggestion of foul play, implying that some repayments have been made for accounts that actually were properly authorized. Number 1. What's next for Wells Fargo and banking in America? As one of the world's largest banks at the center of a high-profile scandal, Wells Fargo is set for a difficult period, as trust in the company has waned. However, customers and analysts are already using it as a case study for problems with the U.S. banking system in general. In the wake of the account scandal, Wells Fargo employees have reportedly argued that mounting pressure to meet sales targets is reason for the false accounts. So, as long as the banks are expected to grow, it's estimated that similar issues could continue to arise. On the one hand, banks face ever-increasing target figures. On the other, there are fewer and fewer people to sell to, which is why firms often look to make more money out of the customers they already have. This problem doesn't excuse Wells Fargo's underhanded tactics, but it does help explain the scandal. As individual refunds remain relatively low, perhaps the most shocking aspect of this story is that over 5,000 individual employees were prepared to con customers and participate in fraud, with some sources reporting that as many as 2 million fake accounts were created. What happened at Wells Fargo reflects company-wide malpractice and has industry-wide implications. Did these facts get you thinking?
I bet a lot of people out there are wondering this morning, how do I get my money back?
To vote for which news story is covered next, head over to watchmojo.com/suggest. And be sure to hit that subscribe button for more newsworthy top 10s published every week.
This was illegal. This was wrong. This was flatly wrong.
Yes. What is the message that you can get from the second video? Don't you think it's a little bit alarming for bankers? Saman?
Yes, sir. I mean, target pressure will always push you to compromise the internal checks and balances.
Yeah. So this is the fourth largest bank in US. So if this could happen in US bank, what about our banks? But only thing what we see is this could happen in our banks as well, but I don't think it will go up to this level, because our systems are much more, controls are much more better than them. Why I say that? Now this Wells Fargo, when you're having a corresponding banking relationship, they used to visit local banks. So when they visited us in 2018, and they were asking a lot of things with regard to money laundering, and they were asking whether we are conducting training for our team annually, and the board of directors training, and so many other questions. So most of them we have done, and above their requirement we have done. So in turn, then I asked the question from them, do you have any training sessions that you all have done to your people? Can you share those with us? If they are asking us to do some training, so they are Europe, they are high-end type of countries, no? So they should have more training sessions than us. So when I request them to share some training that they have done, they have not done training. So they normally, now that is in 2008, there was a money laundering transaction where they had to pay US HSBC US, they had to pay 1.8 billion US dollars for one transaction. So I don't know, though these governance requirements in the law, it seems to be they're not respecting. How can this type of a thing could happen? 5,000 employees lost their job opportunities and creating 2 million fake accounts. So our systems, we have better controls than them, right? Within a short period, we'll get to know, okay, this is happening inside the organization. So it seems to be that our controls are better than their controls, right? But still, you need to be a little bit careful. Sometimes you might request one or two officers to drive the campaign, but they can, in order to achieve the targets, they might sometimes achieve unethically to show the bottom line results. So that is dangerous. And if you take the previous one, the US government, they dilute their quality. So rather than giving mortgages for people who can pay facilities, they went subprime, reducing the quality. And the political theme was at that time, the president's theme was to give a home for each and every family, or a loan for a housing loan for each and every family, or house for each and every family. As a result, they had to dilute their processes. And finally, most of the people who got under those categories were daily paid employees. So when they lost when the recession came and they lost their jobs, and as a result, they couldn't pay the loans and the property values went down. So these are very good learning points for all of us, right? We need to understand these are very challenging, as well as these things could happen to our systems as well. So we are lending more on condominiums. What happens if the condominium prices go down? So every 4 to 5 years, you get a bubble on condominium property. And so currently, it's a artificially created boost. So it seems to be that there is a huge boom on construction. That is not the case. People have stuck for a long period. Now people are trying to finish their work. That is why the artificial boom is there, not because people think and they start their own work. So be careful when you're lending for this high-rising building. අපි අර කියන්නේ මේ අහසේ මාලිගාවල් වලට සල්ලි ගෙවනවා කිය අහසේ මාලිගාවල් බඳිනවා කියන්නේ, right? You pay an advance for the 50th floor building where they have not even done the piling. අහසේ මාලිගාවකට සල්ලි යොදවනවා වගේ නේ. So be careful. So these are real things that has happened in the past. So through these short videos, we can learn a lot. Any inputs from the others? Yes, any inputs on the others? Can you see the slides? Can you see the slides?
Yes.
Right. Okay. So then we'll see what are the bank lending and securities. Then today we'll discuss some basic points with regard to the requirements of bank lending and securities. But unfortunately, bankers, they have a misconception that they think your bank lending, the key factor is to have a security. And so then as a result, sometimes when the customer comes for the requirement to explain his position or the requirement, sometimes the bankers, they will first ask, what is your security? Right? So you can have any security, that's fine. There's no argument, because the regulator says that we have to have security in case if the lenders default. We should have some kind of an asset So sell those assets and recover the outstanding. So if that is the case, in such an instance, you need to have some kind of a security. But my point is where we should not mainly focus on security and lend. So if you start concentrating on security and if you're going to lend based on the security, I think that our decisions will be very wrong. So then it will not help the banker to recover. So if you see, if you take the subprime mortgage crisis, so the normal understanding among the bankers are to say that, okay, the property mortgages are the best securities. So they keep on taking a lot of property mortgages. What happens if the prices goes down due to a collapse, due to a bubble, right? And top of that, the other securities what we take are also not so not up to the expected standards. So therefore, we need to be very careful on those aspects rather than just taking securities. We have to ensure that we get the right security in order to maintain the required controls. Otherwise, what will happen? Sometimes you will take a security which will not add value at all. And when you go for realization, which you will not be able to realize as well. So you saw that when you come to realizing you can't get what you really want, right? So then the question is, are we getting the right security, or do we have the right controls over securities is a question. Okay. This one last session I discussed before, when you're lending, you should be able to understand the each party's liability, and at the end of the day, you should be able to see who will be affected out of that. So whatever the business you lend, whatever the nature of the individual, if that individual is going to default, you will have to bear that loss. So there is no argument behind that. Finally, it will affect you. I may be the number one customer, but if tomorrow, if I collapsed, if I say I don't have money to pay, definitely you will have to bear the loss. Maybe I have a company, one of the biggest companies that I have. If tomorrow, if I'm going to say I'm bankrupt, finally the hit will come to the lenders. So therefore, we have to ensure that we have to be very careful on these aspects. Rather than concentrating on the security, there are certain other key important factors we have to consider before we go for lending. Capital requirements and how business fulfills such requirements. So there are different ways that you can fulfill your capital. One is the equity or the shares free of cost. We say equity is free of cost because whenever you want, you issue shares to the shareholders and the shareholders will bring money. But you have to understand, under the Companies Act 7 of 2007 Companies Act, there are restrictions for companies to issue shares. Now, if you are mainly, we have three types of companies: private, public unlisted, and public listed. So for private companies, they can't issue shares to the public. So private companies, you have single shareholder company or 2-3 shareholders form a company. So private companies, they can't issue shares to the public. Even public unlisted companies also, they can't issue shares in a big way. Their share issues will be limited to a certain group. So if you want to collect 1 billion, sometimes you will not be able to get that 1 billion because you are playing within a certain limited scope. Only listed companies can issue shares for its shareholders. Now, even a listed company, it's not easy for them to issue shares. The main reason, their shareholders will say, no, we are not going to buy your shares. We have invested maximum. Don't issue shares. If we don't exercise, our percentages will get diluted. So they don't want to dilute their holdings. So as a result, even a listed entity, they might say, no, we can't invest in your shares. We have restrictions. So therefore, either you take a borrow from a financial institution, or you manage on your own. So, and at the same time, there are certain companies, especially when you come to equity, there are some companies where they have issued non-voting shares. Because non-voting means, once again, if you want shares, capital, you are not disturbing the voting shareholders. You are collecting money from the non-voting shareholders. So the non-voting shareholders are also a group of people who will bring money for the company or equity, but they can't vote at the annual general meeting. So basically, company can issue shares to the public. Once again, those are listed entities only. They can issue shares through voting and non-voting, and they can get equity for their account, for them to expand their business. On the other hand, debt, borrowed money, you can have loans, debentures, overdraft, and bonds, fixed. Whereas in these, we consider there is a fixed cost. If you have issued shares to the public, we normally say it's free of cost. Why we say free of cost? If the company is not earning profit, you don't have to pay any dividend for the shareholder. Right? So you can say, look here, we are not paying dividend. We are not. We don't have profits this year. We are not going to pay a single dividend. So then what happens in its equity shareholders? There is no assurance that they will get a dividend. But on the other hand, debt shareholders, from the day one itself, there is a fixed cost. You have to pay a liability. You have to pay interest. So from day one itself, you will have a fixed cost. Now, businesses prefer to go for equity, but there are restrictions upon the same. Businesses, it's good for me to issue shares, but I can't issue shares because there are restrictions, limitations from the acts as well as from the shareholders. Hence, businesses has to borrow by way of debt capital. Whether I like it or not, only option available for me is to borrow from the banking sector or from the financial institution. Any questions? Right. So therefore, I think rather than depending on the security, we need to understand the customer's KYC. So unfortunately, bankers think customer KYC is a money laundering requirement, and customer KYC is adequate when you take at the beginning of or opening of the account. Thereafter, most of the time, this information will get not updated. Now, there is a huge risk on that, because for me, KYC is the most important understanding about your customer. If you know your customer well, you can cross-sell your product. So KYC should not be a operational matter. It should be a marketing tool. Simply, if you know me and my family, you can easily market credit cards. You can easily market different savings accounts for my family. And if you know my behavior, you can give, or if you know my interest, you can say, okay, why not buy a house? Why not have a better luxury vehicle? So this KYC is not a tool because we have to comply because the central bank says for money laundering, you should know your customer. But from a business perspective, we should be able to use this KYC in a more prudent basis and get the real requirement of KYC whenever the transactions you are doing with the customer. On KYC or know your customer is regulatory and legal requirement. KYC is important to prevent identity theft, financial fraud, default in the bank lending, money laundering, and terrorist financing. So the banker's understanding is KYC is only for money laundering and terrorist financing, but not defaulting the bank lending. If you don't know me, you will not be able to recover from me. Now, for an example, tomorrow I'm coming to your bank. I had opened an account 10 years back. So my KYC is no problem. It's there. Right? So looking at me, okay, background, everything, you will consider, we'll say I'm a businessman. So even at that time I have stated I'm running a business. So today also I'm a businessman, right? So you might be happy about my, because I'm old customer, and you give the facility and I will prepare all the documents as required by you. I will sign all the documents and I will give it to you. But my address have changed. Earlier I was staying at Mount Lavinia, now I'm staying at the Hivala. So all my documents are printed in the name of Mount Lavinia address. Now, from there onwards, I'm going to default you. Now what happens? Can you go to courts and take action against me? Can you go to courts and take action against me? Yes? Can someone answer, please? I'm waiting for your answer. Yes?
Don't think so, because our documentation is, it falls under incomplete category then, because our address is not correct.
Yes, so your address, my address is, you don't have my right address for you to send the letter of demand. So you will not be able to proceed action against me, because the whole idea that I have not given the updated interest. So then what happened to your facility? You gave me 10 million. I'm a businessman. I have early address was given, but subsequently I have changed the address as well, but I have not informed because you never wanted those information, no? So how can you say that your KYC is up to date? These are very small things, but it will make a huge change in your lending decisions. Now, out of you all, have you all updated your NIC? Or are you using the same NIC which was issued when you are doing O levels? Yes? Chandima, have you updated your NIC?
Yes, I have an updated one.
Yeah. What about Kosala? Kumudu? What do you mean updated? How many years back?
No, not.
Not. Okay. Yeah. A good example. Chandima, how many years back you updated?
6-7 years.
6-7. That's okay. Is the same address you are staying now also?
Yes, sir.
Okay. Kosala, what about you? Saman? Have you updated? Updated. Saman?
Updated 5 years back.
Okay. Right. So the point is where sometimes it's very clear that our updates the data are not updated. So Kumudu, maybe that your early address and now it's totally different. So we need to be, yeah, definitely. So there's a real example here, no? The classroom itself. So that is why the importance of this updated KYC is required. Even today I can give an address and tomorrow I can change it. Right. So as bankers, continuously you have to update customer information. Now practically when you maybe have millions of customers, when you send the letter they will not respond. That's obvious, that I can understand. But at least when you are giving a facility, because that is the risk that you take, you are giving me money. At that time, get hold of all the updated information. Now maybe that you are, as you said, okay, you have updated the KYC. I opened my account last year. So you have taken all billing proof, everything is up to date when I'm opening the account. But after 1 year, I'm coming to your bank and asking a facility. So don't think that 1 year old KYC is up to date, because already 1 year has gone. So simply what is more important is my address for you to maintain the case. So you, without harming his interest, without disturbing him, just tell, sir, why can't you, are you still residing in the same address? He might say yes. Can you just WhatsApp us a updated billing proof or one of your electricity bill? Just WhatsApp, you don't have to come here. So that's more than enough. So when you get the latest bill, you see the same address. So as a banker, you have done your role. After some time, the customer might default because he has business problems. But you have taken the updated KYC. So today we have a lot of facilities to update our information. So why can't you request the customer at the point of lending? Just update your latest bill, land, phone or electricity bill or water bill. That's enough. So then you're not creating a hassle for him also. He might think, okay, just taking a picture and just WhatsApping you. So, but you get all the required information from that customer's name, his address, which has not been changed. So if you don't know the customer's address, how can you maintain the case? You have to send the letter of demand. So if the letter of demand is not served, you can't maintain the case. If the summons are not served, you can't maintain the case. Sometimes you might think, no, I have other ways of finding it. Customers are very smart. Don't take a risk. You do your job. You make sure that your KYC is up to date. Now, I might send, okay, today this is my last bill, and tomorrow I can change. That's a separate issue. That's an exceptional situation. But don't rely any information, even 1 month is too late. Request him just to WhatsApp sir, updated electricity bill, that's fine. Now, when you come to foreign banks, corresponding banks, they request us to submit directors this electricity bill and those things, updated electricity bills. Knowing that these directors are in the bank and it's available in the public also, in the website, everywhere, right? But still, they time to time they ask our directors, especially chairmen or 2 directors, updated electricity bill. So that is the control that they have just to maintain a relationship, nothing borrowing, nothing. Just to have the foreign relationship with us. So as bankers, we have to understand, right? When we are borrowing to a customer millions, why can't you get this basic information? So for me, KYC is the most important requirement for lending, nothing more than that. When KYC required, any questions?
Yeah, Mr. Siranatha, what I see, what the mistake we do as bankers is we do the KYC at the table of mostly in accounts opening table, not at the place where we discuss the advances. In practice, that is the area we should address, I think. Now, when we actually, as you said, the KYC, know our customer in terms of all the details what we needed is most important at the time we advances.
Yeah.
That is the case. We do as a practice in the accounts opening table. That's the case.
Yeah. So why you do that? You think KYC is for money laundering and terrorist financing, but you don't consider the advantage of that. It's true the regulator has enforced that requirement to avoid money laundering, but we should be able to use that KYC for our internal practices. Lending, cross-selling. Right? If you know my requirement, my family and my way how I behave, you can market a lot of your products. So we are not using that KYC for internal matters. Instead of that, normally this KYC form is taken by the bankers. Why they take? If not, the auditors will make a comment. To avoid the audit comment only, you take the KYC.
Exactly. Just to fulfill that requirement.
That's Especially, you must understand, if the KYC forms are not there, even the FIU can charge for each KYC around 250,000 penalty. Right. So that is they have gone up to that extent. So you need to be very careful. Right? For each KYC, they can charge even more than that as a penalty. Yes, you are dealing with a customer without adequate records or up-to-date records. So that is the risk. Okay, any other inputs? Right. So make sure at the point of lending, you don't have to have a lot of hassle on that. Just get the key information updated. That's enough. Especially if you want to maintain the court case, you should know the current address of the customer. So our latest billing proof will make a lot of value addition for your details, your information about the customer. KYC required for the following: opening bank accounts, availing locker facility, applying for credit cards, applying for loans. So make sure that you take this KYC in all instances, not just opening account. We, as you said, we are just focusing only the accounts opening, not for anything else. You always say it's an existing customer. So you are proud to say I'm an existing customer. That's true. And a long-standing customer. You also will come and say, look here, I have first series number. I was the first customer to come. So you are excited over my statements and I'm misleading you. So then when I say I was the first customer, how can you ask KYC from me? No, you do your job. Maybe I may be the best first customer, so give that recognition. You don't have to dilute that my statement. Yes, we are so proud of you, right? So that's why I'm here to give you the best service. So put it in that form and get hold of the customer and make sure you get the documentation up to date and proceed the transaction. So sometimes we are overconfident about our customers, but you categorize them as the number one customer. So these number one customers are the group of customers who will do bigger damages for the organization. So you have to be very careful, right? Now, a lot of money laundering transactions are done by these big customers because then it's very easy for them to control the things because you don't believe that they are into money laundering. So some time back, there was a state bank. They captured actually this person. He was a local party who involved in a monetary scam. His father was a commander of the Navy, and he stayed at Colombo 7. His credit card comes from Barclays Bank, a high-end customer of that bank as well. What do you call priority customer or whatever the customer. Now through him, there was a money laundering transaction. I don't know whether you all can remember. I can't remember his name. There was a 3 or 4 years back, there was a Shell Gas chairman was taken into custody that related to this transaction. So high-end people are doing this type of things because then those are not suspicious. You think, okay, he is an high-end, this type of things will not happen. But that is the trick. 5 C's that what the banks and other lenders value about a potential borrower when making a lending decision: character, capacity. So those comes from KYC, capital, collateral, and conditions. Don't put this collateral first. You need to understand character, capacity, and capital requirement and the condition. So before you lend, if you can't understand the real requirement, why this person is obtaining this request, what is his request, is a feasible study, I think you should not go proceed with that facility. Now, character is the personal and business reputation of the borrower. I may be a reputed person, but still you need to understand whether he's trying to mislead us to his character. Sometimes some people will come and say, look here, I know I'm so and so. I have this number of business. My assets are this. I know your chairman well. I have gone to the same school or same college. So then you will get little excited that you straight away when they say that he knows your chairman, And sometimes you always try to be careful because you know, based on the way he spoke, if something goes wrong, he will go and inform the chairman. So then after that, I have got the control edge over you, and now I am dictating my terms because I know how to handle you. So let them, if you are doing the right thing, chairman will not go against you if you are doing the right thing. Chairman will get irritated if you are doing the wrong thing. So you do your job. Maybe it's chairman's spouse or chairman so and so, or the managing directors, or maybe the president so and so. Still, you have to do your job. So the character you have to handle very carefully. People might show that they have a very good character, but behind the character, they will do what they want to do. Capacity refers to the means in which the borrower will repay the debt. If the loan is to fund business, the lender wants to know if the business will generate enough cash to fund both ongoing operations as well as to pay back the loan. For personal loans, the borrower needs to earn enough income to pay back the loan. So if I'm going to start up a business, I have to have a feasible study, and I should be able to convince you to show, no, out of this business, I get this much of profit, which I can pay your loan as well as I can go in concern, continue my business. But in most of the cases, what happened? Customer, they want to start a business, but he don't know anything about the business. He's just trying, put in an option, right? And at the same time, the banker doesn't know that business as well. So then you have to rely on the customer explanation. No, if you don't, I'm not asking you to have all the knowledge for all the businesses. It's not practical. But if your organization is having a unit where they have multi-skilling with regard to different businesses, where you can, now when you want some legal clearance, you put it to the legal department. Legal will have different qualified people, and they will give the feedback. So maybe your CLO doesn't know, but there is another person who knows about that area. But similarly, you don't know all the business, especially if you're into micro business. There can be different businesses and different markets for those businesses. So simply, if you don't have a general idea about whether this is a right business for you to start, sometimes customers might mislead. They will show a lot of figures, and they will get what they really want. So as bankers, you have to use common sense, and you should be able to ensure, no, we also know you need to put controls. But at the same time, sometimes bankers, what they do, they put a lot of controls for the small customers. Now, if I come tomorrow to a bank and ask for, okay, I want a facility, I'm starting a business, you will ask several things. You will ask what is your capital contribution. You will ask what is my history, right? You will ask how we are going to pump this, how you are going to bring knowledge. All these are important. And you might say, okay, this is a little bit risky, but we can agree for higher rate. If the normal customer rate is 5%, you might say, okay, 6.5. So you're getting everything. You're pushing me down and down and down. You're trying to get maximum from me. And you might say, no, we can't give 1 million. If you want, we will give 500,000. Right? So you squeeze the customer because I'm a small person. But at the end, on the other hand, big customers, don't talk anything. They dictate the terms. They will say, look here, I want this facility on this particular date. I'm getting this transaction. By this time, you have to ensure that everything will get credited to my account. Security, of course, I can't give any properties. If you want, I have some stocks and book debts. You speak to my accountant. He will arrange everything. I'll be flying on this particular day. And I need, before I fly, I want to ensure that everything is signed. So then what happens? You keep on running behind that particular facility and to accommodate customer. Now, majority of the customers, we get queries. Luckily, right now I'm not involved in the business, but I can remember The customer is going abroad within a week or next Monday, next Tuesday. So all the customers are going abroad like nothing, no? So that's the only trump they have. This is with great difficulty we canvas this business. But if you don't do within this particular day, customer is going abroad and he will be returning back only after 2 months. So by that time the new year has come. So many reasons. So make sure that you don't lend to a customer unless you are happy. You can give, there'll be another person who have to recover if you're not responsible for recovery. Right? So you have to understand whether I have the required capacity. So even with big customers, sometimes you lend just for the cost or sometimes below the cost. But small customer, you try to keep the maximum margin and get the advantage out of that. But understand your big customer may be 50% of your portfolio, branch portfolio. If the big customer is going to affect default, you will go down by 50%. Whereas a small customer is the one who really giving profit. Damage, loss of a small customer will not make a big impact to your business. So we have changed all our priorities. We are in the wrong direction. Right? Instead of focusing on the more small customers, we go for big numbers, and finally big numbers are the big defaulters. Right? Now you saw what happened in Wells Fargo, no? So that could happen in the lending processes as well. I can remember one particular foreign bank, accounts manager of a corporate customer. He was handling corporate customers and high-end customers. So in order to balance show his achievement, now she has to get fixed deposit for certain amount. So she was involved in priority customers. So now certain instances why she requests the customer to uplift the FD and redeposit the same amount within the day or the following day. There were certain cases that she has done just to secure her profits. Finally, she was thrown out from the company, bank. A senior, she at that time, when she was thrown out by the company, around 20 years experience in a foreign bank. Another foreign bank, in order to secure their profits, this happened in 2018. They shifted the deposit credit cycle from just 2 months. There was no impact for the customer, just to show their profit and get the performance-based rewards. Then what happened? The most of the top people, corporate management people, other than 2 or 3, all have to leave the company. Right? So you reduce the quality because of this targets. So I'm not going to say the targets are wrong, but you have to have a consistency. You have to have a discipline. Now I have seen in most of the finance companies, now every quarter they are relaxing. First January, February, March, they are relaxing, but after 15th of March, especially on the 31st March, they are not going to sleep even. They're trying to post all their activity, the transactions, the credit facilities before the day end run. Second quarter, it's the same. On the last day of the second quarter, huge number of facilities. Third quarter, huge. Fourth quarter, much more higher than that, because that's the last day for you to achieve your targets. So why are we going with a cycle? You should be able to go in a certain ascending line. Why this cycle? All of a sudden it goes down and all of a sudden it's just like heartbeat, right? Why this? So you need to understand, we have to be very careful on this business. because we are borrowing from other people and we are lending. This is the only business where you borrow from someone else and lend. So if our lenders start defaulting because we have not done the analysis part properly, if the depositor lose trust, that will be the end of this financial sector. US, that has happened. US people, when they go and deposit money in the bank, they don't have trust that they will get the money back. That is one reason that they will come, they are investing in other areas. So need to understand the practical difficulties as well, at the same time the self-discipline also. Now capital refers to how much risk the borrower is willing to take with regard to the subject matter of the loan. If there is a business loan, the lender will look at how much money the borrower put into the business. If it is insufficient, the lender won't lend money because the borrower isn't willing to take much risk. So when I come to your bank, you will ask, what is my contribution? Now today, if I want to form a company, I can have one share, 10 rupees, and form the company. And tomorrow I'm coming to your bank where the company doesn't have any assets. Tomorrow I'm going to come to your bank and I'm asking for a 500,000 loan. So my stated capital is 10 rupees. Company doesn't have any assets. Tomorrow I'm going to come to your bank and I will give a very clear feasibility study of my new business. And I'm going to ask from you, I want a facility. But at the same time, I have another 100, 200,000 in my hand as well. Now, if you are the credit officer, will you accommodate me or not? Yes. Will you accommodate me or not? Kumudu? Saman, will you accommodate? Saman, will you accommodate me?
So it's only with 10 rupee share capital you are coming, right?
Yeah.
So probably not.
Yeah. Any advice from your end for me?
Because if you really have an interest in the bank, the amount that you are having with you should ideally come into the business.
Right. So because of that, you are not willing to give me the facility.
I would encourage, I would encourage that to come into your balance sheet to show that as your equity contribution.
Okay. Any other answers? Any other inputs? Right. So one option would be, okay, you can request me to increase my stated capital and to at least to make sure, okay, 40-60%. And top of that, why can't you consider my personal guarantee? Why can't you consider my personal guarantee? Here I'm asking just 500,000. I told that I have 200,000. So you can request me, okay, you bring that, you capitalize that 200,000. Then there will be 200,000 contribution against my personal guarantee. Why can't you lend? Now another problem here, it's bankers, they don't assist startup businesses. Now I can remember this last chairman, Pekapitia, he was telling in a forum, initially when he want to start his business, he has gone to all the banks. None of the bank have supported him. Prime Land also stated the same similar thing. When I explained my concept, no bank helped me. Right. So, but still I had to start on my own now. Now today I'm in this place. No, now I 100% agree. Your argument is very correct. And also you should be able to consider my personal guarantee because I'm personally liable once I give the guarantee, no? So still you have an option Why not increase the stated capital for 200,000, where you will consider at least 40-60 and you give the loan, and at the same time consider my personal guarantee. So through that avenue, you can take a chance and consider the facility, because the amount of risk that you take for large customers is massive. They just dictate the terms. You have to do whether you like it or not. There is no option for you to think. But as I told you, unless country is talking about SMEs. The banks are central bank is pushing for SME facilities. Now within the organization, when among the banks, they are a little bit reluctant to give facilities for SMEs. So then how can these SMEs grow? I'm not going to tell you to take the 100% risk and do, but still I have seen, if you know the customer, KYC, you should be able to take a call and you should be able to consider him and help him also. So once you give the facility, until you give the facility, customer will come behind you. But once you give the facility, you have to go behind the customer. So, but if you maintain a good relationship, I'm talking about official relationship, it will be easy for you to have a close relationship and drive these requirements. Right. Collateral is the property used to secure the loan. Typically, it has a value equal to or even greater than the value of the loan. Lenders seize collateral to repay the loan should the borrower default. So collateral is important. That's the last option what we have. In case if the customer is defaulting, we should be able to realize, convert this collateral into cash and recover our outstanding. Now converting this collateral into cash. Any questions?
Yeah, so I have a small question.
Yeah.
Now this limited liability company, if you are lending to a limited liability company, can we take a outside guarantors, like other than the directors? So if they offer us to personal guarantees as against a limited liability company, is there any possibility of getting third party personal guarantees?
Norm is where we always insist the guarantees of the directors. So then
there are single director companies or sole director companies also there.
Yes.
So then we'll have to get that particular person's director's guarantee only, no?
Yeah. So no, you can't say that only that, because now the argument is where my business, my company, I'm the director. So then when you take the guarantee of mine, it makes sense because I'm the person who is getting benefit out of this company. Now, if there's another director who is also a director of this company, getting his guarantee makes sense because we are the two people who are getting benefit out of that. But you are linking a third party and you are giving, requesting him to make a guarantee. So I have not seen where there is restrictions where you can't you can't exercise on a guarantee, because guarantor means a person who will give an undertaking. It's a secondary liability. In case if the principal borrower defaults, he will pay. So in order to strengthen our relationship, we always try to insist on an existing director to give the guarantee, but it doesn't mean that you can't get a guarantee of a third party, because the bankers' practice is where they go for the own director's guarantee, not for a third party guarantee. But it doesn't mean that you can't get a third party guarantee. There is no legal restrictions to exercise on a third party guarantee. Finally, I have signed for your business as a guarantor. In case if you are defaulting, I am ready to pay. So there is no restriction on that, because finally guarantor means a person who is willing to secure someone else's facility. No, it's a secondary facility, secondary liability, not the primary. So if another person can give, if a director can give, only thing I don't have any interest over that company. So there can be in the later stage, I can say that I never got any benefit out of from this facility because I'm not a director, I'm not a shareholder. Therefore, I'm not liable. So, but that is the only risk that we see. But still, if you have signed willfully without any undue influence or any pressure, the person who signed as the guarantor is responsible. Okay. Now, in case of partnership, what happens? Do you take outside partners?
No, outside, even the partners we don't take as guarantors no, for the partnership.
Yeah, the whole idea is where, whole idea is partners, they have the joint and several liability. Jointly get to then several. So if you take an outsider, this joint and several quality will not be there, no?
Yes.
Because he doesn't know anything about the business. A partnership means two or four people running a business with a view of earning profits. So the term firm, he is not a party. That is why we insist on a existing partner's guarantee. And also, when you're giving a power of attorney to a partner, are you selecting an inside partner or outside partner? Inside partner or outside partner?
Outside, no?
No, it should be inside. Because inside partners, only the partners, they know about the firm's business. Outsiders, they don't know. Right? So time to time, these rules will change. But currently, what I know is they are considering an existing partner and give the power of attorney. I can remember when you come to this power of attorneys, alternative director, appointment of alternative directors. Earlier, the central bank rule was you had to appoint an outsider. Earlier rule was to have to give the power of attorney to existing party, who is another director. In case if you are leaving for a short period.
Now you can't, no?
Now you can't, right?
Yes.
So now what they say is that person has to go through the fit and proper process, and you have to get approval, and it has to go to the register of companies and everything. So now you can understand there is no so-called norm, but through experience, sometimes you will change. So time to time, these practices are changing. So getting an outside person's personal guarantee for a company, I don't think is a big issue, but only thing he can say that I have not got any benefit from this company because I'm a totally outsider. That's
I certainly believe that if taking a guarantee is no point.
No,
Anyway,
no. Concern is where we try to take the personal guarantee looking at the person's title.
Yes.
Not his assets and liabilities. If you focus on the assets and liabilities, and if you get the personal guarantee, it's much more effective. Because now, for an example, sometimes the bankers, they get the personal guarantee from retired principals. Their pension is not enough for them to take their medicine. Because he's a reputed person in the society, you go and get that person as a guarantor or government servants. So that conceptually it's wrong, no? You're putting him into deep trouble. You have to ensure that the person who is going to give the guarantee have adequate assets. In case if something goes wrong, you should be able to recover from him. So that understanding is not there. Not that the guarantees are not so good. Our approach on guarantors is wrong. Right. Any other questions? Please raise your concerns, discuss your points, and it will be a learning point for me as well. Maybe that you don't have to agree everything what I say, right? You might be having different views and different practices, so please share those with me also. Then I will also get to learn new things. So I'm not going to say that all what I say is 100% correct and perfect. No, that is not the case. I'm looking from a different angle and I'm explaining. Sometimes practically it will be difficult for you to exercise what I say, but from a broader picture, there are certain things that you have to, whether you like it or not, you have to do it. Now, getting the KYC or at least the billing proof of the customer. Sometimes when you request from the customer might say, why you want this thing? Other banks are not asking this information. Only you're asking. So tell him that we just want to get it updated. That's it. Definitely other bank is also asking. That is why he is putting a lot of pressure to you, because they know that they can control you, but not the other bank. Sometimes you might lose 1 or 2 customers. Don't worry. There are a lot of opportunities in the market with regard to customers who are looking for customer-banker relationship. So we have to look for new customers. So you saw Wells Fargo, they issued credit cards and bank relationship for existing customers, because you have all the details. It's a matter of just creating an account and passing the cost to the branch. So what is more important, new customers, not the existing. It's good to have existing customers in a more cross-selling purpose. For you to cross-sell, you don't know the customer. KYC is not available. So how can you cross-sell? Because cross-selling, because you don't use KYC for cross-selling. So my personal belief is that KYC should be a marketing requirement, not an operational requirement. Right. Any questions? Right. Now, unconventional ways of business can borrow money. There are conventional and unconventional methods. So when the bank can't borrow from banks or through equity, they will go for unconventional things. Some of these alternative financing sources have been around for a long time, but 2007-2008 credit crisis spawned some of the new opportunities for business owners and individuals, as well as some of new ways to access them. So you saw credit crisis, crunch, what I showed to you, creating CDOs and getting money is with the new business opportunity. Now, factoring is another opportunity, right? Now, when you come to, do you all know what is factoring? What is factoring? Yes. What is factoring?
Receivable discount.
Okay. What about post-dated check discount? Do you consider that as also as factoring? Yes. Yes, someone?
It goes as a check discounting facility.
Yeah, not as factoring. Yeah, but normally, if you're among the leasing companies, finance companies, finance in the sense, not the banks, they have 2 types of factoring. That is why I have put in this form. Real factoring, that is invoice factoring, and post-dated check factoring. So in the morning, I had a session that one of the banker was asking me, so what about post-dated check factoring? So I very clearly told it is not factoring. You can't consider it as factoring. Now, factoring means, we'll say I'm manufacturing water bottles. I'm selling all these water bottles for all the supermarkets. Cargill, Kiehl's, Arpico. So normally they don't pay on time. They will have credit terms. They will say 30 days, 60 days, 90 days, whatever. So I will have the invoice. I can't realize this money, convert these invoices into money. So I will go and keep these invoices with the bank, and the bank, based on my relationship KYC, they will give me around 50 to 60%. Or it depends on me. Sometimes it can go up or it can go down. So until the money comes, they are facilitating me. So then it will be easy for me to revolve my business and continue. So sometimes the Keels will send directly to the bank, not to me. They don't pay me. And the bank can recover the outstanding and settle the dues. Sorry, then keep the balance in my account. So that's pure factoring. But out of the businesses who are doing factoring, they are doing around 20% pure factoring. Balance 80% are based on post-dated checks. Now, this is how it happened. I write a check from my own bank account, and I'm keeping this my check with the bank, and I'm asking for them to discount this and give me a facility. So just see the amount of risk that the bankers are taking. Knowing I don't have money in my account, I'm issuing a check, and against the check, imagination check, to say that there's 1 million in another month's time, you're giving me 500,000. So this is the biggest risk what you do. Some financial institutions might say, no, we are not giving customer own checks. We are getting third-party checks. So I will request one of my friends to give me a check, which I will pay 10% commission out of the check value. I will keep that check with you, and I'm getting the facility, and tomorrow I can vanish. So understand this post-dated checks facilities are not factory. And when you are issuing the checkbook, you inform the customer, don't issue checks without funds, right? And it's a criminal offense. But in a different way, you accommodate the customer to say, you bring your own checks, we will give you a facility out of those. So I think this is one area there the NPL ratios have gone up. Most of the finance companies, their NPL ratio went up because of this post-dated check, so-called post-dated check factoring facility, but it's not factory. So if you see sometimes the finance companies, normally the bankers are a little bit reluctant on this exercise. Out of the so-called factoring, 20% will be the actual factoring, balance 80 to 70% will be post-dated check facilities. So post-dated means a check issued future. By that time, so many things can happen. Account closed by the drawer, account closed by the bank, death of the customer, account seized by the law or the courts. So many things can happen, no? So why do you want to take an? It's worse than giving clean. When you are giving clean, you understand the customer, his behavior, and here you are requesting a customer to cheat, and cheat not just a civil offense, it's a criminal offense. You know that when you issue in the checkbook, we will say, don't issue checks without money. It's a criminal offense. And at the same time, in order to accommodate the customer, we will say, no, you bring 1 or 2 post-dated checks, I will give the accommodation. Am I right or am I wrong? Any views on that? Saman, any inputs from you?
Yes, sir, we have, bank is not accommodating, so we call it accommodation of own check. So we tend to decline those requests.
Yeah.
But we have seen most of the time when our clients' checks are coming in clearing. So those are the checks that they have given to finance their own facility with some other institutions.
Okay.
So like you said, it's heavily happening out there.
So banks are, more than the banks, the finance companies are doing this. So it's unnecessary risk.
In fact, yes, the checks were drawn in favor of finance companies.
Yeah. And also 3-4 people can get together and do that. I can issue a check to you. We'll say ABC. A and B is issuing 2 checks to C. C and B is issuing 2 checks to A. And A and C is issuing 2 checks to B. These 3 people are going to 3 different financial institutions and getting factoring facilities. So collectively, they can default the customer banks or the financial institutions. So customers are very smart, right? You have to understand that. I can remember when I was at the compliance department, some customers, they come and ask, tell us the countries that they don't have any money laundering controls, because I want to send this money through that path. and they ask, can I open an LC in my spouse's name because I want to I want to hide this transaction from my accounts. Straight away they give the answer and the question, everything is given, conclusion, everything is given. So we have to just say yes or no. So be careful. This system is very dangerous, and as bankers you should not damage your reputation, because money laundering is an area that's very, very tough. They are very concerned now. And also we have to be a little bit practical, because through those transactions, especially lending and money laundering, those are two important areas that we have to be careful. Right. Hedge fund lenders. Hedge fund lenders have been referred to as the new corporate ATMs. That because hedge funds will often loan money into higher risk businesses. The size of the loan will depend on the quality of the pitch made by the borrower. The decision to lend is usually made after some due diligence, but with greater flexibility than the experience with conventional lenders. The benefit of hedge fund loans is that the access to funds is usually quick. The dangers include high borrowing cost and payment penalties. Some hedge funds have been known to fund risky loans to exploit the international information gained in the process, which can benefit their other trading. So hedge funds are taking high risk type of businesses. If you can't get money from a normal financial institution, sometimes you might go for hedge funds. So if you take in an informal lending type of institutions are also similar to this nature. What do you call this? Ginipoli Mudalali is also doing some kind of hedge funding businesses. But you have to be a little bit careful because they have a better network and their approaches are unethical, right? If you don't pay them on time, they can do so many other things. And the other one is to peer-to-peer lenders. Peer-to-peer lenders may include family, friends, and even strangers who are interested in your success. This can be formal or informal arrangement. The benefit of this type of loan are quick access to cash and flexibility in repayment requirements. So sometimes you can borrow from your parents, from your friends, family friends, or brothers and sisters. So this method is a little bit quick because sometimes you don't have to pay anything for them, as also because of the relationship they will give you a loan. Customer lenders. Borrowing for business customers started in the early 2000s with community supported and agricultural loans. In agricultural loans, farmers customers loan money prior to the planting season and took payment in harvested products at discounted price. The practice is customer lending. A business must be well established in the neighborhood, possess a good list of customers, and have earned the trust of those customers. Dangers and drawbacks include customers wanting uneven amounts of product and or non-stock stock products, and customers dropping out the repayment with product program. So we'll take a group of farmers. You select a group of farmers and you help them. From the scratch, you time to time you give loans. For harvesting you give, for planting, leaf planting, preparing the floors, fertilizer. You give stage-wise facilities. When the crop come during the harvest period, straight away the money will go to you recover your outstanding and you settle there, or you have a mechanism there, you recover from them. So this is a group work will work, especially in the agriculture sector, but there is a danger. Now, last year you saw what happened because of the fertilizer issue. Now, if you have lent for initial stages for that type of group of people, when it comes to the fertilizer never came. Right now, as a result, they will not be able to pay a single cent. So if you are lending these customer lenders, you will have a lot of problems. Simply, you will not be able to recover from them at all. So you have to write off everything. Now, recently I saw the minister was stating that they are going to give 400 million damages for the farmers who lost their income. I think what the main concern is, now it was a huge gala event and there was a lot of celebrations for that as well, to just to give this losses. I think the conceptually their concept was very good. Avoid inorganic, bring organic fertilizer into the system. But their approach was the failure. Without educating the people, they started stop importing what do you call fertilizer, and they told farmers to go and apply local stuff. So gradually they should have done, okay, first harvest, if they want 10 of fertilizer, you should have give 8 inorganic and 2 organic. Second tenor 6 and 4. Third tenor 50-50. So gradually they should have approached. I think that is the best decision that you can do for a system. But unfortunately, the execution was a failure, utter failure. So now the minister says, okay, we are going to give 400 million damages for the farmers who are affected out of that. So now the biggest damage is that when you start giving money free for people, they will not do anything. Next year also, they will go to the road. They will not do any harvesting. They will not start any growing. Next year also, they will do the same drama, and they will try to get the free money. So then, as a country, where's this production? How can we export and bring a lot of income? So all these are interconnected, but unfortunately, these people can't understand the basics. I don't know whether they can't understand or whether willfully they are doing it. Conceptual wise, that's the best concept, right? So, but the organic fertilizer cost is also very high. Credit card lenders, there's nothing much I can talk about that. If you want a facility, yes, and make sure that even for credit card customers, you need to get their KYC updates also. Convertible debt instruments, there are a lot of convertible debt instruments. One of the most important convertible debt instruments is the debenture. Now, what is the difference between a debenture and a share? Difference between a debenture and a share? Yes?
Debenture is a share is a equity capital. Debenture is a debt capital.
Okay. So
there
from
is a obligation to pay interest on debentures.
Okay. So what is good from a company's point of view? Whether it's good for me to issue shares or issue debentures?
It's depend on the company situation. So I think for some company debt is good. For some companies equity is good. When we use the debt, there is a concept called tax shield benefit from the debt.
Okay. You are talking from the debenture aspect, tax year benefit?
Yes, debenture in perspective of debenture, we can have the tax shield benefit. In common sense, we can say that share issuing is best because we don't have any contractual obligation to pay the dividends.
Okay. Okay. So simply, share is an ownership, debenture is a long-term liability. So as she stated, when you, if you can issue shares to the public and get equity, you are not obliged to pay a dividend. If the company is earning profits only, you have to pay a dividend. But I told you there are restrictions with regard to issuing shares to the public. Public will not willing to invest more and more money in your company. They will say, now this is enough. No way, we are not going to give a single cent. And at the same time, debentures are 4 to 5 year liabilities. So I'm going to issue debentures. you will come and invest in my company, looking at my company strength, because all the companies can't issue debentures. Only the reputed institutions can issue debentures. Banks, big giant companies, group of companies can go for debentures. But from an investor's point of view, you are taking a risk, because in case if the company goes on insolvent liquidation, especially the debentures issued by the banking sector, those who fulfill the Basel III requirements, in case if the bank goes on bankruptcy, your debenture will be converted into shares. So the point is where at the time of liquidation, insolvent liquidation, what will be the price of a share? If X company today market share is market price is 100 rupees. If the company go for insolvent liquidation, what will be the price of the share? Yes. Can someone tell me what will be the price of the share if the company goes on insolvent liquidation?
So book value.
Book value. Any different answers? It will be zero. Who is going to buy a bankrupt company share? Wanikin Corporation came to the market at 100 rupees, but when it bankrupt, share went to zero. Lehman Brothers share went to zero. When it bankrupt, who is going to buy? There is no market demand. Book value will not be effective that time, right? Because finally the share market prices are depending on demand and supply and the manipulations. Now, if you see the banking sector, book values are much more, banking sector share prices, book values are much more higher than the trading prices, no? If you analyze and see the book value of major shares on the banking sector, their book value price and the market price, there is huge difference. So today, normally the share price should move based on fundamentals. But unfortunately, that is not happening. Share prices are moving because of manipulations. Unfortunately, we don't have much ethics on the stock market. That is why these manipulations are happening among the brokers. Brokers, they manipulate. So then what happens? You don't know whether these fundamentally strong shares are not moving, whereas this in the bull run, certain shares which there is no value are running like nothing. So that is one reason where sometimes it's very risky to invest in shares in a broader concept. So if you are investing in shares, I don't know, I think these days are good because the maybe sometimes year-end profits will be declared in company's point of view, and maybe that there is an opportunity, because even under COVID situations, these companies are doing well, right? Now think about your own organization. Whatever said and done, you all are doing well. Financial sector, non-financial sector, majority of the businesses are doing well. So if there is a improvement in this current system, chances are more that the prices will move up, right? So there's a opportunity as well, but be careful, don't pump everything in one share, right? Hotel sector will have a lot of market opportunities, market demand in time to come. Whatever said and done, both coins are favorable for them, either quarantine centers or hotel, the foreigners, right? So this convertible, what normally happens on the maturity, they, instead of paying the money, they issue shares. So then there won't be any cash outflow for the company. Only the share debenture will be converted into share. So then you become a shareholder, And you have to ask the question whether I want to become a shareholder of this company. Now banks, they issue debentures, unsecured debentures. They're not going to issue secured debentures. So that clearly shows at the point of liquidation, if something goes wrong, after paying all the debts, only the debenture holder will get money, plus shareholders. If your debentures are converted into shares, at that point only the shareholders will get the money. Right. Now cash flow lending versus asset-based lending. Now these are two instruments that we used in the system. Either you look at the cash flow of the business and you lend, because this when you come to Citibank, they are more into this cash flow lending. They look at the project and the feasibility and they lend. While majority of the banks, local banks, are much more focused on asset-based lending. So we think when you have an asset against a facility, we are very strong. We can do magic. Next week, I will show you the so-called assets are no value at all. For me, it's just a piece of paper. Right? You take a lot of papers, incomplete set of papers, and you put it into a CHUP under dual control. And when the recovery, when the customer is non-performing, when it passes to the recovery, it's very difficult for the lawyers to draft a plate, because there is nothing in that particular document. On top of that, from the point that it is transferred to the legal, most of the time the asset is no value. So understand the current assets are changing very fast. So my strong belief, asset is fine, get the assets, no problem. But top of that, you need to have the KYC, a strong KYC relationship. Then you are safe. In cash flow lending, the financial institution grants loan that is backed by the recipient's personal or business cash flows. By definition, the means that a company borrows money from the expected revenues they anticipate that they will receive in the future. Credit ratings are far more important in this form of lending, in addition to the historical cash flows. So credit rating is important. Now the point is where even credit rating, so bank to bank, if there are different varied credit ratings for each customer, then there is going to be a problem. So you have to have one credit rating across the entire banking system for one customer, so that the centralization should come. Unfortunately, the centralization, as far as the central bank is not introducing a centralized system for credit rating, just like a KYC platform for all customers, it's going to be very tough for the banking sector to understand the risk of their lending, understand the KYC of the customers. These loans do not require any type of physical collateral like property or assets. Instead, these lenders examine expected future company income, incomes, its credit rating, and its enterprise value. So they have more focus on the future. So if your relationship is good, if your KYC is good, it will be helpful for the bank or to focus on the future and consider your accommodation. The advantage of this method is that a company can obtain financing much faster than an appraisal of collateral is not required. So you know the practical difficulties of getting this so-called collateral. Property, it will take minimum 2 to 3 weeks. You have to check the title, you have to prepare the extract priority notice, right? And register the mortgage. You have to get the local authority certificate. You have to redo a resurvey, right? So many other things. So it will go up and down several times, and finally, once it clears, it will take more than 2 weeks. Stocks is also the same, machinery is also the same. So almost all the securities what we have a lot of practical problems. So when you assess the practical problems, when you understand the practical problems, you will realize whether it's worth to get these securities. And top of that, at the point of recovery, assets no value at all. Interest rates for the loans are typically higher than the alternative due to the lack of physical collateral that can be obtained by the lender in the event of the default. Now, sometimes you might think, okay, when you get the property, you're up on the deal, you have a property. Now, what happens if I'm going to sell the property subject to your mortgage? My property is mortgaged with your bank. I'm going to sell this property without informing you, subject to your mortgage at a lesser price. If my property value is 100 million, I have obtained 60 million from you. I am getting one of the thugs in the community or a drug seller, and I will say I'm going to sell this property subject to the mortgage. You buy at 60 million. So definitely he will buy. You will not be able to throw him out. I'm keeping a headache for you and I'm leaving. I'm migrating the country. So then what are you going to do? You are not aware that there is a subsequent transaction done by me because I have not informed you. You will not get to know at all. So I'm up on the deal for 100 million. I got 60 and I got another 60. So maybe that person might check the title, or I have another option. I can get hold of a person who is working at the land registry. I can give a small amount to him and I can request him to remove the extract and folio. So then my records will not be there at all in the register of companies, register of lands. So I can sell to any person. He will check, okay, this is damaged. So I can say, look here, someone has removed that, what to do? So that's why I'm giving at 60 million, where I'm owner migrating low price. That's what I'm selling this property at 60 million. So he is ready to buy that because he also can't do this black money. So it's a good opportunity to convert this black money into white money. So I can sell and I can vanish. Later only you will realize that I have done this transaction when that person starts some business there. So I'm leaving a huge problem for you and leaving. So be careful. These things are happening in the system. I'm not going to say that those are good things, right? Smart people can do these things and finally you are in real trouble. There are a group of people who are ready to buy lands with problems. They will say, no problem. You sell it at a low price, and they demand it and they put it at a low price. And my headache is over. Or my intention was to cheat you. And I gave the money and then I told him, look here, this is mortgage to this bank. No, he will say, no problem, sir. I will handle that. You give this property for 60 million. I will put some pressure to the bank as well. You go out of the country. That's it. So what are you going to do? Are you going to attack this person? Practically, it's not easy. Because bankers, financial institutions in this country, that they will not go up to that level. If it is informal lending, yes. You will have a group of thugs and you use the thuggery to recover, not formal request, which bank can't do. Right, asset-based lending, any questions? Right, asset-based lending compromises business loans secured by the liquidation value of the assets. The recipient receives this form of financing by offering inventory accounts, receivable and or other balance sheet assets as collateral. Common assets are that are provided as collateral for a capital loan include physical assets like real estates, such as land and physical properties, company inventory, and manufacturing equipment or physical commodities. If the borrower fails to repay the loan or defaults, the lending bank can seize the collateral and sell the assets in order to recap the loan amount. So it's very easy to say, okay, you can sell it and you can recover. But in a practical sense, it's not so easy, because you have a lot of practical problems of selling this and recovery. Right, so we'll discuss those practical problems at the next session. Now, creating a charge at ROC. Why? What do you mean by a charge? How do you create a charge, and why? What is a charge? Why we want to create a charge, and what is the mechanism? Anyone? Yes. What do you mean by a charge? Don't tell me that you all don't know what is a charge. Senior set of bankers are here. Yes. What do you mean by a charge? So if the bank is lending against a company-owned asset, I have a company. I have a company asset, which is a building and land. My company wants a facility, so I'm mortgaging my company-owned asset. So in such an instance, you need to create a charge at the register of companies within 21 working days. If you create the charge only, you will be considered as a secured creditor. If not, you will be considered as an unsecured creditor. So the advantage is where at the time when my company is going on liquidation, I told you, you will get priority. First, the employee salaries, EPF, ETF, government taxes, then the secured creditors will be paid. So my liability will be there in the company's book as a secured creditor. Thereafter, the unsecured creditors will come. So if the bank fail my transaction to be recorded as a secured creditor, my position will come down to unsecured creditor. So after the secured creditors are paid only, I will get the opportunity of getting, bank will be able to get money from me. So only company assets, even a fixed deposit, right? Even a fixed deposit, you have to inform to the register of companies and secure your position as a secured creditor. So banks, they have to do it. Failing them to do within 21 working days, but the option available for them is to go to courts and give the reasons to the courts and get permission for courts to register the transaction. Or you can request the customer to settle the loan and re-grant the facility. So those are the two options. The first one is the best. Second one is not so practical. Once I take the loan, I will go and spend that. So there won't be money for me to come and bring and settle your loan outstanding. But that is an option. So at the point of liquidation, the priority order will be, if you want, you can write down employee salaries, EPF, ETF. That's the second one. So that is put a dash and say regulatory payments. Sorry. Okay, as regulatory payments. Third one, payments to tax authorities and other government institutions. Then the secured creditors. Then unsecured creditors. Debentures. Finally, the shareholders. So this is the sequence of liquidating at the time of liquidation or paying at the time of liquidation. So we always want to secure the secured creditor's position. But at the same time, continuously we have to make sure that you update the annually whether there are any liabilities for unpaid salaries, EPF and ETF. Those are statutory payments. So just see whether I told you to include a statutory payment. It should be statutory payment, not legal payments. It should be statutory payments. Now, if you don't update that, all of a sudden we'll say company has only one asset, that's 5 million worth of asset, which you have mortgaged, whereas the company has not paid their employees' salaries, EPF, ETF for 4 million. So you can't say, look here, this is blocked by us. We are not going to give. Labor laws might say, look here, paying employee salaries is much more important than your bank recovery. Therefore, you release this asset to pay the employee salaries, EPF, ETF, and government taxes. Any balance, you can take it to your books. So far, I have not seen that kind of an order, but it's possible. Because Sri Lanka's labor laws are very strong. So in such an instance, sometimes labor laws might say you have the secured creditor position, no problem, but we want to protect 1,000 employees because you have the company has not paid for so many months. So therefore, annually you have to get an update from the company whether they have paid all their employees' salaries, EPF and ETF, and the government taxes up to date. Okay, we'll stop for today, and I will finish the rest of the points, and I will take some real examples on securities, and I will explain the practical difficulties of using such securities in day-to-day business. Okay then, thank you.